Call to order, Board of Equalization for the City of Dickinson for Thursday, January 2nd, 2020. Let the record show that we're missing Mr. Steiner and that Mr. Frederick is en route. He did text me, so we will have 4 commissioners here. So we will begin. The first item up is the agenda, and I understand, Mr. Hirschfeld, there's going to be one amendment to the agenda.
Mr. President, Commissioners, with your permission, I'd like to move the Mrs. Vital Foods abatement up to first. He's got a small child here, he knows that makes him sit around.
Couple hours, so.
Okay. Any questions for Mr. Hirschfeld on the amendment? Okay. With the amendment of moving the Mr. and Mrs. Kuntz's abatement to become item A. All in favor of the amended agenda, state aye.
Aye.
Opposed, same sign. Okay. Mr. Hirschfeld, you can begin.
Mr. President, Commissioners, thank you. There was some additional data that's been given to you since the folders were first sent out. There are 3 memos dated 12/31, so if it's in your binder already, it'll be the one just ahead of the red tab that says greater than 10 acres. Be a memo that'll have a heading like this. There's one for all 3 properties, as it does have the acceptable motions on them. And so we'll start off with the Kuntz's abatement of their house at 238 Fifth Avenue West. And so they had purchased the house in 2018 in August, if I remember correctly. And the true and full value placed on the property as February 1st of that year was $234,200. And the purchase price in August then was for $200,000. That is the value that they're seeking on the abatement. We have been to this property in 2016. Our former appraiser, Jeremy Farrar, was at the property. And then again, after Mr. and Mrs. Kuntz purchased the house, we were invited to go through the house again. Mrs. Kirschenheider, who works in our department, and myself, we went back to the property in April of last year, or April of 19, so yeah, last year now, and made some adjustments, but a lot of those adjustments were based on the fact that they had done a little bit of work to the property already. And so we did make a correction, and the 2019 value is now $215,800. So in considering an abatement, the purchase price wouldn't have been available to use in our models and our methodology to set the value for that year. However, it would have been considered for the 2019 valuation, and it was. Or for this upcoming valuation, excuse me, the 2019 or the 2020 valuation. Excuse me. So with that, I guess I'll open it up to the floor if you have any questions for me, but our recommendation is to make a denial just based on the fact that the purchase price was after the date of valuation, and the owner at that time hadn't had an issue with the valuation.
Okay. Any questions for Mr. Hirschfeld on the abatement request on 238 Fifth Avenue West, Dickinson, North Dakota? I know the homeowners are here. Do you wish to say anything, Mrs. Kuntz? Do you have anything to say? Just if you want to come up, please.
Are you just denying it?
No, we have.
That's my recommendation.
His recommendation has to deny. Yes. Could you just state your name for the record?
Michelle Kuntz.
Okay. Thank you, Michelle. His recommendation is just to deny. So we're just going over this data right now that's been provided to us with the new values. Do you have anything to add?
Can we how can we redo it? Like, we would like to bring it down because it's obviously not the value of the house right now.
Well, right now the application is to to have it at $200,000. So then I guess we'll take that under consider. Is that you stand on the 200,000?
Yeah.
Okay. Any questions for Mrs. Kuntz?
Mr. President, my question is
Trustman.
for Mr. Hirschfeld. What was the 2017 evaluation for the property? Did it come down significantly? Is 2018 higher? I was gonna look it up, but I'm not getting.
I think 2017 was 294
Does it say that?
on the big spreadsheet. It's all the way on the bottom.
Okay. 230.
In the
No,
packet,
234.
it shows 234, 2.
Yeah, then it went to 200. Their request is 200.
That is correct, Mrs. Trustum. The 2017 valuation was the same as it was in 2018 of $234,200. Which, to go back from there, it was $252,000 in 2016 and $261,000 the year prior. So it's come down about $30,000 for the 2018 valuation, and then, clear to $215,000 for the 2019 valuation.
And when we get our true and full values for 2018, we're looking at the 2017 year, is that correct?
Yes, the sales from 2017.
So the purchase of the property in 2018 technically would not be factored into valuations for the 2017 year?
That is correct.
Okay. Thank you.
Any other questions for Ms. Kuntz or Mr. Hirschfeld? Thank you. Now I'd look for a motion from the board. And we do have to, if you look at your memo that has been provided by the city assessor, you have three options. You can move to deny the request, the change of value. You can move to accept the abatement request on this property at $200,000, or you can, your third option is move the value of the property identified and change it to a given amount.
Mr. President, I move to deny the request for a change in value.
We have a motion to deny.
Second.
And we have a second. Any further questions, comments? The motion to deny, with a second, we'll go ahead and take a vote. Mrs. Trustum?
Aye.
Mr. Frederick?
Aye.
Ms. Walla?
Aye.
Chair votes aye. Your information, Ms. Kuntz, will be forwarded to the county. You can appeal to the county. Okay, Mr. Hirschfeld, we'll move on. The next item on the agenda is the Frederickson Byron properties.
Mr. President, thank you. Commissioners, if you haven't already found it, in your front sleeve, there is a spreadsheet that has all of the properties being abated today. Within those, we have columns that identify the property. The blue column shows what the peak valuation was in 2015 following the commercial revaluation that Vanguard did. I also included the 2019 value, again, that Vanguard did. There's a percent change, so that shows the reduction that's occurred over the last 4 years. And then the peach column is the 2017 true and full value, so that's the value that was set on the property. The green column and then is the abatement request that the property owners or their assigns will be bringing forth today. And then the gold one at the end there is what the assessor's recommendation is. And then I left room for us to put in any changes that we make. So moving forward, I'd also provided an abatement outline that just kind of has my notes, has a little bit of information in there, well, if you'd like to follow along. And we start off with, what do we know? What is the known value? In 2015, Vanguard did their reappraisal. So we've got an outside company, came in, took on a large project, worked it fully, and we have very accurate valuations in my opinion. So our abatement date of 2017, we're only 2 years removed from that. But within that 2 years, the market changed, or started to change, and some of it changed drastically. But what do we know? We know that incomes were decreasing. And that's just about all we know, because there's very limited market data available. We don't have many willing, or any willing buyers or sellers. So with that, I've prepared a little a PowerPoint spreadsheet here. We can catch the lights, thank you. So we have 3 approaches to value. And we've heard this before because we've been at the Board of Equalization meetings, but since this is a new abatement hearing on these values, we'll go over everything again. So we have a cost approach, the income approach, and the market approach to value. The income approach to value uses the formula, that represented by VER, or value, income, and rate, as the 3 values that we use to solve our equation. So what we want to find is value, and that's the number that we're looking for is what is the property worth. We need to take the income of the property and divide it by the cap rate. And if we're looking for the income that the property will generate, we need to know what the rate is and multiply that by value. But if we're looking for what the cap rate is, that's value divided by income. Well, that's part of the problem with our utilizing the income approach, is we don't have 2 values to find the third. Our value is unknown, that's what we're solving for. Our rate is unknown because we don't have any sales to determine a value. And if we go outside of what our local market is, we can determine a value, but it may be misleading. And then our income data is sometimes limited. Not everybody participates, or we don't get enough of a sample size to feel comfortable with. So within those 3 approaches, the cost approach we considered, and the assessing department, we utilize the cost approach because we have that data available to us. The income approach, we considered it, but there's limited data, it's unreliable, so we don't rely heavily on it, and we didn't consider it very strongly. And same with the market approach. It's considered, but if there aren't any current sales, it's unreliable. We're going back in time to utilize sales. And that's part of what the state has us do, is review 30 sales, and we go back in time 3 years. Well, 2017 going backwards, we're back to the peak of the market. And that doesn't accurately reflect what the current market is, but is what is required by law. And so what brings us to today is I provided the district court's opinion on 4 of the 5 parcels that we're hearing today from Frederickson and Byron. Those were for the 2016 valuation year. And the judge in the district court, he affirmed the commissioners, that would be the county commission. I mean, we sent ours up there, but it's essentially the county commissions whose decision is reviewed. And he affirmed all 4 of those for the My Place, the Homestay, Lincoln Apartments, and the Jefferson Apartments. And I want to take a couple excerpts out of those opinions. And within that, the judge said, taxation of property and the issues concerning the valuation of property for the purposes of taxation is a legislative function, not a judicial function. So in essence, we're to follow law. The judge isn't the one who makes that decision, and he didn't. And he also states, what is the board and the assessor, what are they to do? Well, it's solve true and full value, which means we are values to be determined by considering the earning or productive capacity, if any, the market value, if any, and all other matters that affect the actual value of the property to be assessed. And in both cases, he cited century code or prior law as determined by the Supreme Court. So within our methodology, we can consider the 3 approaches to value. And we will rely on the one, or we will utilize the one that's most reliable. I mean, market value, we are required, or market value is defined as having a willing buyer and a willing seller. And have an outside appraiser come do an appraised value on the property, and it may be what a buyer would be willing to pay, but if you don't have a willing seller, you don't have a market. And then in the material that the attorneys from Frederickson and Byron had provided, in there they made reference to the sales ratio is not a method of valuation. Well, it's not a method of valuation. The cost, income, and market approaches are the method of valuation. The sales ratio is just a test of goodness of the data. And I was unable to find a test of goodness in the data provided by the attorneys from Frederickson and Byron. Within that, they also provided, besides the abatement request, the summary request has a different value for each and every one of the 5 properties. And then in the supplemental material, the owner's estimate packet, 4 of the 5 properties have a value different than the abatement request. So in essence, we have 12 different values for 5 properties, and 3 of those values is less than what the abatement request is. As I wrap up my monologue here and we get ready to hear from the applicant, I mean, I want to draw attention to the homestay appraisal, as there were 5 comparable sales that were utilized in that. The closest one was in Fargo, so we don't have a local sale. The age difference ranged from being 5 to 25 years older than our subject property. And they make reference, the applicant does, to a 2012 appraisal that was 20% higher than what our highest assessment was. And our highest assessment was in 2015 at $122,000 per key. Their estimate was $143,500 per key. And now, just 2 years after that assessment, we're at $111, so we're showing a decline in the market and trying to reflect the changes, but they're before us asking for $40,000, and I'm unable to support that. So with that, we'll ask Mr. David Tibble if he'd like to come up and provide his reasoning. Sir.
All right, well, good afternoon, everyone. David Tibbles from Frederickson and Byron in Fargo. Really appreciate your folks' attention here today. I want to be respectful of everyone's time here. Mr. President, if I may, I do have just printed copies of much of the information. Just hand these out. This is largely talking to most of this.
Thank you.
I understand you have most of that information in your electronic packet. I've also included the appraisal that Joe had made some reference to with regard to the homestay property. One other thing I would just like to draw your attention to, inside the front cover, I've got sort of a one page that's really just kind of an overview of the as assessed valuations, the original valuations, what the applications were for, and then essentially what we're able to demonstrate here today. I'm duplicating again information that you've got, but just so that you have that all in one spot there. So I know I'm here today on behalf of a few different taxpayers. We've got three hotel properties and then 2 apartment buildings that we'll talk about here today. So I'll be back kind of going back and forth on some of those. Maybe just a few comments real quick. I do want to say I really appreciate the PowerPoint that Joe had put up. I mean, that really kind of shows that this gets to be a math problem. And really our goal here today is to show some more information that we can use to plug into some of that formula. I know, as originally assessed, the cost approach was used, and the information that we're presenting here today, new information utilizing that income-based approach, information again that may not have been available at the original time, but that we do have here today. You know, and I know just a couple other points, just to respond to some of those introductory remarks. I know, you know, folks are aware, obviously, that there are a few different, there are some cases right now with regard to the prior applications from last year. Those are pending before the state Supreme Court, and so that's still something that's in process there today. You know, I don't want to relitigate some of that, to be frank with you. You know, I'm here today to present some more information, you know, for this next year, for the year, the February 2017 valuation there. So that's what I want to focus on here today, and just kind of walk through that information. And then just another one real quick comment. You know, I know mentioned that, you know, we're asking for amounts that are different from, you know, what was actually applied for on the original application. You know, the law is pretty clear that, you know, that the application essentially sets the floor. You know, I can't come up here today and ask you for less than that number. And I'll get to that point here in just a second. You know, but essentially our goal has been, you know, once that application, you know, regardless of when the application comes in, our goal is to get to, you know, that right number. And where there's a difference, we're asking for something that's higher than the original assessment. Again, hoping to get to that right number there. I'll speak just a little bit more about that in a few moments here. So I've handed out those materials. Just real quick run through of everything that's there. You've got that summary memo. The first you know 15 or 16 pages there, you know, that essentially just kind of goes over process for abatement requests, our arguments, and then beginning on page 8, we've got some specific comments regarding the 5 properties that we're discussing here today. I realize that there's a 6th property in here that was actually dealt with before, and we'll just sort of disregard that here today. Tabs 1, 2, 3, 4, and 5 are the information that we've provided. Again, with the exception of that appraisal, you have this in your electronic packets, but just so that we can kind of get on the same page there. Generally speaking, that stuff is appraisals and other third-party materials. We got summaries of the owner's income approach calculations, and that's generally the first page within each tab. Behind that, we've got financial statements, you know, so actual operating statements from these properties, and then for the apartment units, we have rent rolls as well. Again, actual data there. So you folks know, I mean, the basic outline of legal standards involved here. I don't want to dwell on any of that, but just a couple quick points, I think, before we get into kind of the minutia of each property here. Just kind of building on something I'd mentioned earlier. I mean, it's clear under state law that, you know, the goal here, city and county boards are obligated to get to, you know, that right answer to determine the true and full value based on the information that's presented at the hearing today. You know, I'm not up here, you know, meaning to appeal the as originally assessed valuation. That's not what this is, right? It's not a trial as to whether Joe was reasonable in using the numbers that he did then. It's really meant to determine the correct value based on the information that's available to you now. And on that point, we are certainly not attacking city or county staff with any of these requests. I mean, it's a hard job. It's not one that I can do day in and day out, that's for sure. Very few challenges make it this far. But the law does allow taxpayers or folks with an interest in property to raise their hand and ask for that revaluation. Again, from the evidence that's presented here today, what's available here today, not just what was available at the time the assessment was originally made. So I really kind of view my role here today as presenting that additional information for you, answering whatever questions you have. If there are any answers I can't provide, I am certainly willing to get you what information I can. If you choose not to act today, we can get you additional information. That's been our goal throughout all of these requests here. I know these requests were filed on the very last day, November 1st. That's the last day that they're allowed. I know that's frustrating. Also know that again, with these properties here, for the most part, we're asking for an amount that's different than what was originally applied for. I know that's frustrating, and really all I can say is that, the state law has some subtleties, and some of those things we might like, some we might not, but our goal all along is to comply with the law with regard to these applications. We've done that, and really our goal is to get to that right answer for you. So that's kind of the first point. The second point, and I promise I'll be brief here. The issue before you is true and full value, right? And the definition of that term, I know, Joe had kind of read some remarks from the court opinions there. Page 2 in your binder here has that definition of true and full value. Specifically allows you to consider the earning and income potential of a property. You're familiar with the three approaches. Joe went over those. These calculations, this information that we're providing you here today, is all based on that income capitalization approach, and the state Supreme Court again has specifically approved of that. Our position is that for commercial properties like the hotels and the apartments here that we're discussing today, that's really the most viable, really the most relevant process. With regard to these properties, the market of potential buyers for these hotels and apartment buildings is not somebody just looking for a home, right? It's folks who are looking for an investment. It's institutional purchasers there. Sometimes, the cost to construct a building is certainly relevant. If you're, looking to build a house or looking to buy a house, obviously you care about the quality and the cost of the materials in your kitchen, but for an investor, that's really the primary motivation is what is the income generating potential of the properties, and they'll value that on that basis, and that's really the justification for going with those methods here in these materials. So with that, that's kind of my sort of overall spiel there. We've got 5 properties here. I know you kind of have a few different agenda items for the 2. If you don't mind, I think generally, these kind of following that scheme, I'd like to go in order here, in order based on the binder, and kind of start with the Dickinson Homestay LLC property. This is an 83-room hotel property. This is the one that Joe had mentioned the appraisal for. It was originally opened in September 2013. Originally assessed at that $9,282,500 amount. The application sought revaluation to $1.3 million, and I'm here asking today, requesting $3.3 million, and that's all based on the appraisal that you'll see in the very first pages of tab 1. That's a third-party appraisal. And I'll speak a little bit more to that in a minute. But if you want, kind of the first-party information at the very back of that tab, the last pages there, we actually do have financial statements from 2013 to 2017, and that's actual data coming from the property. But really relying on that appraisal there, and I understand this was actually provided last year as well. 3 important points I just want to point out about that. Number 1, this was commissioned by and prepared for U.S. Bank. You'll see that on the very first page there. Intended for financing purposes, right? It's not intended. wasn't presented. Wasn't prepared for for the sole purpose of, or really for any purpose of abating property taxes. There, it's for U.S. Bank, right? They frankly don't have much of a dog in the fight of property tax issues there. So it has some independence, and I think certainly has some weight based on that. Secondly, this, and Joe had made some reference to this. The appraisal does utilize the sales comparison approach. It analyzes that. It actually also kind of makes reference to the cost approach, and does have a discussion in there regarding just really the irrelevance of that in this sort of property. Beginning on page 96 is where that income approach calculation really begins and goes on for many pages there. Now they looked at comparable sales, but certainly as Joe had mentioned, there weren't many comparable sales, and actually did draw from, one comparable sale that was in there was from Ohio, I believe. And that was really kind of stretching to get to that five comparables number there. And I think recognizing that, obviously you see that comparable sales really is not, based on those five comparables, just really does not mean a whole lot, just given the lack of geographic reach there. So it really stuck with the income-based approach and its ultimate determination. Third and final kind of point I just want to make generally about this appraisal. These same appraisers actually did another appraisal prior to when this building was constructed back in 2012, based on the proposal for this hotel. Assuming a vacancy rate of 75% and certain higher rent rates, or excuse me, higher rates. Actually ended up concluding a value of $12.2 million. So obviously very different from what these same appraisers came to, after construction in October of 2016 is the date from that appraisal there. So obviously much lower occupancy rate, lower rate per room really resulted in that diminution of value there, and the appraisers recognized that. So that's what I have for that appraisal there. Again, I just want to emphasize that that's a third-party appraisal. That's not something that was generated by the property owner here. I can't speak on behalf of U.S. Bank, but I will tell you that generally speaking, I mean, a lender will prefer to have a higher valuation, higher appraisal, oftentimes just to kind of keep in the file and sort of back up their determination for lending purposes there. So I think it has some weight. This is not an appraisal that's meant to get to a really low number. And with that, if there are any questions.
Any questions for Mr. Tibbles? I have a question for Mr. Hirschfeld. I know Mr. Tibbles is basing a lot of the evaluation upon the income this property generates. Did this property participate back in 2017?
Mr. President, Commissioners,
With income statements?
I know in 2016 they did not. I don't believe they did in 2017. That was something I didn't go back and verify, but until we really got deep into these abatements, which would have been when Mr. Royal was abating 15s and 16s, did we start getting a little bit of participation then in 17 and a little bit more for 18. But
That's what I'm always challenged with, is at that time, when we make the valuation and the property owners don't want to participate by providing financials. So then we are limited, or our assessing department's limited in what they can do. Now we have the information, and it's great that you provide us with the information, but this would have been very helpful in 17.
And I guess kind of following up on on Joe's comment there, I don't have an answer for you right now as to whether whether that information was or wasn't presented at the time there. I can certainly get you an answer on that. As with any questions you have, I'm certainly willing to go back and get whatever information together that I can for you, so you folks can make a good decision on these. I guess only response to that would be it's the information that we have available now. The obligation of the city and ultimately the county as well is to really make a determination based on what's available now, and not what was necessarily based on what was available at the time of the assessment there. But I will certainly go back and get whatever additional information I can.
But by using the cost approach, anybody out here that's done business understands what it costs to build out here. We have a project falling off right now, or we're trying to, keep afloat just because of the cost of doing business in western North Dakota. So it is much higher, and then you go through this appraisal and the outliers coming from Wisconsin and Nebraska. it's not a, it's not comparable.
Right.
Any other comments, commissioners, questions? Mrs. Trustum?
I know you don't want to relitigate the case, but I think it is interesting to point out one of Judge Haroff's closing points here. Said in broad terms, the appellate's desire to have the property valued by the income approach suggesting that it is better supported and more accurate than the city's cost approach, which is very similar to what we're doing today. Under the standard of review to be utilized by this court, the county board is free to choose any one of the recognized valuation methods. The credibility of the various valuation methods is a determination to be made by the county board. The county board's decision on the two properties is affirmed. You know, when you said this is a legislative issue, can you go into detail on that? Because clearly, I think that's what he's referring to. Can you kind of go into more detail on that?
Well, yeah, I mean, on that point, I think, Joe had mentioned that quote earlier here today. I guess, my perspective here is to provide you with that information so that you can fulfill that role. I mean, I certainly agree. The state of the law right now is that you get to decide for the information that's presented before you hear today what to go with, right? And you can choose, the city assessor's number, you can choose our number, you can choose any number in between, and that's the state of the law right now. I guess, when I say I certainly don't want to relitigate the old cases, right? I want to focus on the information that's here, for this taxable year, so that you can get to that determination here, right? I mean, I'll be honest with you. It's like I know these procedures kind of look like a court case here, right? But I actually don't view it that way. Again, I'm not up here, appealing, the assessment that was originally made. I think, what was originally made certainly had some merit at the time, but it's not afforded any presumption of accuracy right now, right? There's all of this information of, different qualities, I would say, is right for you to take a look at and make your ultimate determination on there. It's up to you. I'm not contesting that. I really just want to present you with that information that so that you can get to that result. Now, obviously, right, those cases from before, again, they are pending before the state Supreme Court, and potential, right, that that the state of the law may change. But as it is right now, that's the opinion that's out there, and I think within that framework, that's kind of the perspective that we're taking, so that you can get to that determination. Here's that information.
And Mr. Hirschfeld, Mr. Tibble said that because of the application deadline that you had to put a value down.
Right.
And now you presented us with a amended sheet.
Right.
And maybe I misunderstood or I heard him wrong. You can't ask for less than what the original abatement request is?
That is correct.
Even though you have a different demonstrated value on here.
Right.
Okay.
Right. Yeah, I can't come in here today and say, no, we think it should be $5, right?
Because
anything.
you have 3 of them on here that I think are lower than.
Right, and certainly will. That is a great
and 2
point.
that are higher.
Right.
So-
Right.
Mr. Hirschfeld, do you have anything to say to Mr. Tibble's information?
Mr. President, less maybe to this property, but it certainly fits this property and will every other income-generating property that we'll be looking towards. First, my comment to Mrs. Trustum's question in regards to the legislative function. In this situation, you know, I certainly have my opinion. I've provided my opinion of value. The appraisers have provided their opinion of value. But we have two different scopes of work included here, and looking at different sets of data, and we have two different opinions. And both can be correct. I mean, due to the limited amount of information, I can't definitively say that the value that they came up with in this appraisal is inaccurate. However, legislatively, you know, the State Board of Equalization has been granted the authority to oversee this process and have created their own guidelines, one of which is, I've, you know, said tonight and say every meeting, because it's so much different than what typical appraisal practice is we're required to utilize 30 sales in our analysis to test our goodness of data, and we have to go back 3 years before we can supplement with current data. And just going back 3 years to get the 30 sales will result in a difference of opinion of value. And so we can argue whether this one is accurate or not, but in truth, the reality is the assessment is utilizing different data. In my opinion, the abatement process is to correct errors, not to try and say, we think the market reaction is 20% and you had 10%. It is, did the physical characteristics of the building, were they different at the time of valuation versus what was actually there? You know, am I valuing a property that had a wing torn off of it and I didn't recognize that the wing had been torn off the building and added that value? That's what the abatement process is for, in my opinion, not to say, we used a 9% cap rate and you only used a 6% cap rate. And to that, in your back sleeve is what happened in 2019. This is 2019's data, but it's not to be used as data other than as a visual aid. And in the blue part of the table, we show what Vanguard returned to us. And in the green part is how that data would have been adjusted utilizing the cap rate that state staff came up with at 9%. And if you go to the lower right-hand corner of the blue one, you see that the median average came in at 99%. And on the green one, it's 74%. And you're like, well, how come the green one's off 25%? And if you go back to the true and full value column, it'd be the fifth column there. On that first sale price, you see they both sold for $1,040,000, but the true and full value return from Vanguard was $955,000. The true and full value return by the state would have been $706,000. So the sale prices don't change. We're assuming that the income wouldn't have changed, because you should be using the same income if we remember what VER was. But then the true and full value would be different, and that's why it's so important to use an accurate cap rate. You can plug anything in there, but it's garbage in, garbage out. And the medians on the corner show that. So we can plug any number we want into that cap rate. And luckily for us, we had Vanguard who did the work, and we can see where the test of goodness comes out. But if you don't have the sales data to support that, any number can be put in there and utilized. Doesn't make it accurate. And that's kind of part of the issue we have with all of these abatements going forward, past and present, is that every ownership group has a different opinion of what their return should be, what they're hoping a return should be. And that isn't what the market's reacting to. That's just their personal, not requirement, but what they would prefer to have for rate of return. And so we have to be careful to utilize market data where it's available. And if our market data is taking us to Wisconsin and Iowa, I don't see how that's any more reliable than a cost approach that's 2 years old that we're adjusting down as much as state law allows us to.
Thank you, Mr. Hirschfeld. Any questions for Mr. Hirschfeld? Mr. Tibble, do you have anything to state, or I don't want to act like this is court.
Yeah.
But Mr.
much of what he's saying is right. I mean, there's a little bit of with regard to the data, there's a little bit of unknown in all of the data that gets used here. I think to his point, I mean, we're using different data. That is true, right? I don't know that there's much of a distinction in the quality of that data. Again, we'll talk about this even more with some more of the properties that that I'm here to represent. We have actual operational financials that really kind of back up some of the numbers here, and back up this this appraisal that was prepared for this property here. I mean, it's hard data. It may be different than what was reviewed initially, but it's good data. With regard to cap rates, I know the appraisal assumed an 8.8% cap rate based on some market and regional analysis there. I will just say, frankly, we've been willing. This firm represents a number of property owners throughout the state, and we've been going through this process of abatement and discussion. For this round here again for the last month or two, we're certainly willing to kind of engage in a discussion to figure out what might be the best cap rate. To the extent that discussion can be had. So if there's concern about is 8.8% the cap rate to use, we can certainly we're certainly open to discussion on that point. I mean, if you folks choose not to make a decision on that property, we will certainly follow up and are willing to and actually have with some other jurisdictions in the state have engaged in in some discussion to try to get to that right number. Again, that's what we're trying to get to here. We've got some additional information here for your consideration. Really. It's afforded that same weight. It's different data. I will certainly grant that it's coming from a different perspective, but it's available now, and we're here to present that for your review. If you have any questions, we're certainly willing to answer those, and if there's any sort of follow up or concern as to what is the right data to use, we're certainly willing to be there and kind of work through that process. And to that point, I guess I would just kind of as a closing remark emphasize that again, this process, you're allowed to, you can choose the 3.3 million that we're demonstrating here today. You can choose the 9.2 million as originally assessed, or you can choose somewhere in between. I mean, if 8.8% of a cap rate isn't is too low, if you deem that too low, I mean, we can that value would go up. And you can kind of choose within that range there. So that's just kind of a closing remark there. Again, different data, I will grant that, but quality data nonetheless.
Mr. President?
Mr.
If I
Felt.
may ask Mr. Tibble's question, and I know you stated this, but I didn't catch it. The value you're asking for on the homestay, could you repeat that, please?
Value we're asking is 3.3 million even, and that's based on that appraisal there. I know the number that shows up in the application is 1.31 million. If you'd like to choose that number, you certainly can. But I'm not going to ask for that here today. 3.3 million is what we can demonstrate and would request.
Thank you. And Mr. President, if I could point out, the 2019 valuation that was returned for this property was 3.5 million. So, as I've stated, we don't react as quickly as one would like in a dynamic market that we have, whether it's going up or whether it's going down. But I'd say we finally got pretty close.
Well, I think that's the challenge with Western North Dakota, is the volatility of the market and just costs of doing business out here. And we tend to, what we went through in 15 just kind of carried forward all the way to this date, and we have been making adjustments. I guess Mr. Tibbles, right now we have, I know we have, our memorandum that we have in front of us is the properties that we have.
Right.
I guess what we need to do is go through each one of these, if you want to continue.
Okay.
And we'll come back and
Okay.
address
Okay.
each one. I'll have a separate vote on each one.
Okay, certainly,
So-
certainly. Well, then with that, I guess I would move next to, this is the information that's going to be at tab 2 in your binder, and I should point out that that page inside the front cover, I've got some numbers to the left-hand side of each of those property owners that corresponds to the tab that we're looking at here. So that second one would be Lodge Pros Dickinson LLC. This is again another hotel property. So this one, 64 rooms, originally assessed at $3.6227 million. Application sought revaluation to 1.2 million, and Mr. President, to your point here, we can demonstrate with our income approach calculation an even lower number of 1.12 million. And I'll talk through how we get there. I certainly realize that the application was for 1.2 million, and so I'm not going to ask for you today to go any lower than that. You can't. So the request here today would be that $1.2 million number. And then just one other comment here, and I apologize here. There is a typo within that memo at the very front of your binder on page 9. That's where we speak to the methodology that we used for this property. There is a chart there, showing an assessed value of 3.9 million, and then an owner's opinion of value at 1.7. Those are wrong. That's a typo. I apologize for that. So, the numbers are, what are presented in that first page within the front cover of your binder there. So I apologize for that. You go to tab 2, which again is the data underlying our request. You'll see a few things. The very front page is an overview of our calculation. Kind of walks through, how we got to that 1.1 number that we can demonstrate. And then behind there, we actually do have financial statements for 2014 through 2016. So again, different sort of data, but actual data from the operation there. So based on those actual numbers, property owner came up with a calculation utilizing that income approach to get to that $1.1 million number, and just kind of walking through this. To get to that number, we really began with the numbers that drive hotel strength that folks within the hotel industry will use to judge the strength of a hotel property. And those three are, number one, the occupancy rate, which as you can guess is percentage of rooms sold. For this property, it was 47.3%, averaged across the year there. Second would be the average daily rate, which is that average rate that somebody walking into the hotel is actually going to pay. That was at $57.24. And if you multiply those together, you get a number that we're calling here RevPAR, which is actually the revenue per available room. That's essentially the gross revenue a room would generate. In this case, it's $27.09. That allows you to calculate what's essentially a gross operating income amount. When you apply that across all available rooms, right? Even the vacant rooms, the ones that weren't rented out, and that gets you there to that $634,000 number within that income calculation overview there. Now, in keeping with the income approach, right, the goal here is to get to a net operating income, and to do that, we do have to make a few deductions here. First off, you do have to make a deduction to account for the value of the tangible personal property, right, the non-taxable property within the building. And we do that essentially by calculating a return on investment based on that property, and then the cost to replace that property as well. That's what's going on there. We then also have to make a deduction to account for the value of the intangibles involved in the property, right? So like the flag of the hotel, and the management, the management agreement behind that hotel there. And based on hotel industry practice, we do that based on, essentially deducting a franchise fee and a management fee to get to that number. That then essentially gets us, when you factor in a reserve as well, that essentially gets us to a net operating income number, for the building, which will drive the income calculation. When you factor in, we're using here an 8.8% capitalization rate, and that's leveraging what was used in the appraisal for the prior property there, the homestay property, based on essentially Midwest and regional cap rates, gets to that $1.1 million number. Again, I'm not here asking for that number. I can't ask you for that number, but I'm asking for that $1.2 million number. I'll tell you from a practical standpoint, right? Oftentimes when we're filing these requests on behalf of taxpayers, additional information comes up, and oftentimes we get to a higher number, right? Try and get to that right result there. In this case, it actually did come below to that $1.1 million number there. So that's an overview of that calculation there. As you'll see when we get to the next property here, we're really mimicking that, for the next property that we'll discuss, and kind of doing a permutation of that for the apartment buildings that we'll discuss even later on. But that's kind of that approach there. Different data, but again, we think something that's quality data and worthy of consideration.
Thank you, Mr. Tibbles. Any questions for Mr. Tibbles on the Lodge Pro Dickinson LLC? Mr. Hirschfeld, do you have anything to say after his presentation on?
Mr. President, Commissioners, I don't have anything additional to add to this. My argument would be similar to what was already stated.
Okay, Mr. Tibbles, I guess we'll continue on to tab 3.
Okay, tab 3. I think this one will be a little quicker. Like I said, we're essentially mimicking kind of that same process there. So tab 3.
This is the microtel.
This is, yes, Dickinson Properties LLC. That's the microtel hotel. E3 rooms, if I recall properly. This was originally assessed here at $4,841,900. Kind of similar with the prior one, and I apologize for causing any confusion on this. Application sought revaluation to $2 million even. We're asking for that number now. We're able to, demonstrate with that same income approach calculation an even lower number down to just over $1.2 million. Again, asking for that $2 million. I'm not asking for anything lower than that. Tab 3, you'll see the the data supporting that. You've got page 1, the overview of our calculation. Behind that, we actually have financial statements from 2016 to 2018. We have reports generated from STR Consultancy, which is from both January 2016 and then January 2018. Then we also have a broker's opinion back there as well. So based on those actual numbers, again, used essentially that same calculation to arrive at that $1.2 million number. Same sort of metrics that we used before. Occupancy rate of 52.1%, so slightly higher occupancy rate here. Again, that's actual data. Average daily rate per room at $68.32 to be exact, and then revenue per available room, just the product of those two numbers at $35.58. Essentially allows us to calculate that gross operating income at just above $1 million there. You see that as room revenue in your approach there, $1.015 million there. We're making the same deductions expenses. And actually, just one comment on expenses that we're deducting here. You could deduct real estate taxes as an expense. We're actually not doing that here, to try to get to an unbiased sort of number there. We're asking for less. We're not trying to have our cake and eat it too. In that regard there. Making the same sort of deductions for the value of the tangible property, and then also the intangibles as well. And then again, utilizing that same 8.8% capitalization rate that was utilized in the homestay property there. That gets us to that $1.2 million number. Again, not asking for that. I'm asking for the $2 million even that we had listed in the original application there.
Thank you, Mr. Tibbles. Any questions? Mr. Hirschfeld, your opinion remains the same?
Mr. President, that is correct.
Okay, Mr. Tibbles, we can continue to 4.
Okay, so number 4. So we're switching from hotels to apartments now.
Yes.
So we're looking at what is now tab 4. This is RFM TREI Jefferson Apartments LLC. I think it's the Jefferson Creek building, funnily enough. So 45-unit apartment building. This was actually purchased for $6 million back in July of 2014. So just kind of as a little bit of perspective there. Originally assessed at $5.24 million. And here application sought revaluation to $1.53 million. We're able to show with our income approach calculations a valuation of $1,724,500. So we're asking for that $1.7 million valuation above what was requested in the application of 1.5. Again, based on an income capitalization calculation, very very similar to what we had used for the hotel properties here. We actually do use a few different metrics to get to that number there, and you'll see that at page 4, or excuse me, tab 4. Where that data begins there. First page again is the overview of our calculation. Behind that we have both financials and then also rent rolls, actual rent rolls from 2014 through 2016. So that's the data supporting that request here. Let me talk just a little bit about this calculation here. You can see we're attempting with this calculation to again get to that net operating income number for the property. We're using a few different metrics to get there because this is an apartment and not a short-term hotel building there. Calculations really begin with the actual rent that the units were generating. And you can see the number we use there is that $814. That's essentially average rent for the units in that building as of December of 2016, average monthly rent. Just for a little bit of perspective, so I mentioned property was purchased by the current owner. We know that rent fell dramatically just in the time that it was operating the complex. So we know that from a total monthly rent perspective, when the current owner first began operations in September 2014, that number was $148,000, and that dropped to just over $38,000 as of December of 2016. And as you can imagine, right, the average monthly rent fell from just over $1,900 in July of 2014 down to that $814 number that we're using. That's as of December 2016, based on that actual information there. So that 814 drives our calculation as that average monthly rent. We're assuming a vacancy rate of 10% just based on market performance there. Again, based on Dickinson market performance. We do have to make similarly some deductions here. So we're deducting for expenses to get to that net number. Again, we're not deducting real estate taxes, even though we could, trying to get to a sort of an unbiased number there. That gets us then to that net operating income. We're also factoring in reserves based on industry practice there. That gets us to that net operating income number of $166,000. We're running that through a capitalization rate of 8.5%. This is an apartment building, so slightly different than the hotels that we were talking about just now. That's based on market numbers, that 8.5% there, and that drives, that generates then that $1.724 million valuation there based on that income approach. So largely the same calculation. We're using slightly different numbers, to get there, different metrics. I shouldn't say different numbers, but again, really trying to get to, essentially operating income for the property.
Mr. Tibbles, to get to the 814, you are calculating in the vacant apartments. Am I correct?
Yes. Let me think about that for.
Because I'm just looking at your rent roll and I don't see an apartment there under $800.
Right. Yeah, that's essentially that represents kind of that average number. And I know we do have rent rolls going back a few years in here as well, 2014 through 2016. So I see we have like 14 up front there.
Any questions on this property for Mr. Tibbles? Mr. Hirschfeld, any comments?
Mr. President, that was an astute observation, because then the line below that, they're showing vacancy and collection at 10%. And it makes you wonder if there wasn't some double dipping then on that vacancy, which does happen when you start putting market vacancy onto a spreadsheet when you've already accounted for it within your own data. The other thing I wanted to point out on this, my argument doesn't change, but to the goodness of the test of goodness of your data. At 1.7 million and 40 units, that comes to around $42,000 a unit. And towards the front of your manual, I've got an orange chart here that shows the sales that would have been available to us. And they're for 2014, 2015, and 2016. And you won't see any 2016 sales on here because there weren't any. So we have that challenge of not having any 2016 sales. But commissioners, all of you have been up here enough to remember in the past what apartments were selling at $42,000, and that was the ones that Mr. Royal's bringing in. The older apartments, the 1980s apartments, they were selling in the $30,000 to low $40,000 a unit. So we can pretty well say that the cap rate must be too high on this study, because at $42,000 a unit, I mean, that's where our old apartments are selling, not our new ones. Our new ones should be higher than that. How much higher is a good question, but it has to be higher. So we know then that the cap rate that they were using is too high. How high, we may not know, but we know it's not accurate. And I just wanted to point that out, that $42,000 a unit for a 5-year-old building is pretty low in my opinion. The estimate should be higher.
Any questions for Mr. Hirschfeld on this property or Mr. Tibbles? Hearing none, we'll continue on to tab 5, I guess. Mr. Tibbles, another property, Lincoln.
Yeah. So let me, and maybe before we delve just a little bit deeper into that, I mean, maybe just a couple of comments. I think with regard to the vacancy rate, that it is a great point as to, you know, whether one should use, you know, market or, you know, or actual vacancy rates. You know, I can tell you, you know, I've been before a few different, you know, city and county commissions here just within the last month, and I know there's an awful lot of discussion as to, you know, it's like what should be that number. I know, you know, certain folks will call for market, and other folks will call for using an actual. You know, certainly up for debate as to what gets to that right number. And again, you know, my perspective here is if there's any concern as to that, you know, number one, you know, we're certainly willing to engage in discussion on that. You know, number two, if you think that number is too low or too high, or, you know, what have you, you know, you can come to a determination that sort of factors in your view on that number there. So just one quick comment on that vacancy rate discussion there. We use that same approach here with this last property. This is that RFM TREI Lincoln Apartments LLC in the Lincoln Meadows building. This is all at tab 5. You know, this is a larger building, 203 units, similarly purchased for $6 million back in July of 14. This one was originally assessed at $23.8 million. The application sought revaluation down to $6.4 million. We're asking now for $8.3 million, just based on, again, very similar income capitalization calculation. That's all at tab 5, very first page again. You know, you see that that same overview that we essentially went over just now. Calculations begin with those actual rent numbers here, and just again to kind of emphasize where numbers have been here. You know, we know the numbers when the owner first began operations at this property. Total monthly rent September 2014 was $409,000, and that went down to $173,000 in December of 16. You know, averages go then from just over $2,100 per unit in October of 14 down to that $855 number that you see at the very top of the calculation there as of December of 2016. You'll see that similar 10%. That's a assumed market vacancy rate that we're using within that calculation there, deducting for expenses, actuals again there. Really gets us to that net operating income of $811,000 there, running that again through that 8.5% capitalization rate, just based on market performance, right? The information that we have available, that generates that $8.3 million number based on an income approach there. You know, one other thing that is maybe just coming to mind, you know, and I think you folks, you know, certainly realize and appreciate this, right? I mean, you know, newer buildings, sure, you know, not as simple as saying that, you know, an older building, you know, is necessarily less valuable than a newer building, right? Obviously, there's a number of factors that go into that determination there. Certainly something to consider. These are newer buildings, you know, and have that number there. So that's, you know, again, just kind of final comments on that last property there. I think as with the 4 that we discussed just now, right? Different data. I think just as quality of data, the actual numbers that the operation generates, and something worth considering. That's what we're here to present here. I'm not here saying that anybody's information is wrong or is invalid. This is valid information for your consideration.
Thank you. Mr. Frederick.
Did you say your client purchased this building in 2014?
Yes, July of 14.
And what was the purchase amount?
$6 million.
Mr. Hirschfield, we had that sale as part of our information?
Mr. President, Commissioner Frederick, we do. And I think the $6 million figure maybe got mixed with the Jefferson Apartments, the 40 unit. I believe the Lincoln Apartments was much higher than that, and I'm trying to locate that for you right now.
As in, I mean, 23 million to 6 million's a big difference.
I agree.
Yeah, I apologize if I misspoke there. I can certainly get you information, the actual information
probably
if I'm wrong.
That's huge. I mean, that's
Uh,
a big discrepancy if it is 6 million.
Certainly, that's a big number, big difference there. And I apologize if I've gotten that wrong. I guess that information is really meant for background, right? That's kind of a sort of a sales type number, really not generating not generating any sort of result, not factoring into our income-based calculations here at all. So, certainly apologize if there's any, if I've caused any confusion on that. We can get you the actual number there, but please do, take comfort in the fact that number does not factor into our income approach.
Mr. President, Commissioner Frederick, I don't have that on my sales tab, and the reason I don't, as I recall, that a statement of consideration was not filed on this property, so we don't have that from the state. A HUD-1 document was provided to me sometime after that when I was in discussions with the property owner, and I don't remember the exact amount, but in the low $140,000 a unit is what that sold for, because I remember with
But you should have that information downstairs or something.
I have the information, I just don't have it before me today.
But can somebody go downstairs and get it, or?
I apologize, but it's probably somewhere where I filed that. I don't know that I have that where my staff would be able to grab that quickly. But it's well over $6 million. It's going to be in the $28 to $30 million range.
Oh,
Although,
Well, could we just take how long you think you'd find it?
Mrs. Dukart, would you check the DMS for this property and see if we dropped that HUD-1 in there? We probably have a digital copy in there, now that I think about it.
yeah.
We'll just take a short 5-minute break while she's getting that information, so if anybody needs.
I mean, we're off 18 million, so I want to know.
Well, I want to know too. So
So-
if anybody needs to use the bathroom or anything, we'll just take a short 5-minute break.
All right.
Get a drink of water. Information now on the actual property, and if I'm reading this correctly, it was sold for $30 million. So just doing quick math on that, that's $147,000 a unit.
And
Give or
Mr.
take.
President, it's also referenced in the court brief as well. Or not
Thank you,
brief,
Commissioner
but
Trustum. Thank you.
Court ruling.
Yeah, I apologize for misspeaking there. That one that is on me there. But I guess I would, just kind of further emphasize again that number does not have any influence whatsoever on our calculation that we're presenting here today. I mentioned that number. I mentioned that number solely for a little bit of perspective, right? Our calculation is the same, right? It's really driven again by that monthly rent number. Not what somebody paid for for that building, a few years before, year and a half before, 2.5 years before the assessment date, but instead, the actual income that this property generates there. So again, apologies for the confusion there. Certainly not my intent to mislead on that one. But again, in any event, that number does not drive our calculation that we're presenting here today.
So you're comfortable with telling me that in 3 years the value drops 75%?
Based on the income capitalization approach, we can show, based on actual numbers, the income that this property generates is that $8.3 million number. It's actually the actual numbers that, that the operation is producing there. I guess, there's a difference in value there. This is a slightly different perspective, on that information there. That was the number that was paid, again, 2.5 years before, the date of this information there. But again, strictly looking at the income that this property generates, gets us to that $8 million number.
Okay, any other questions for Mr. Tibbles? Mr. Hirschfeld, do you have any follow-up remarks?
Mr. President, not much. My comments will kind of run in line with the other, just pointing out that this property, roughly, they're asking for $41,000 a unit. I did recall a sale would not have been available to me for this valuation year, but if we remember back to the May Board of Equalization event, we did have a newer apartment sold in 2018 at $55,000. That was a distress sale. That was not a market value sale. So besides being north of this $41,000, in my opinion, because that's where the older properties are selling for currently, I think we'd be north of that $55,000 value as well.
Thank you, Mr. Hirschfeld. Commissioners, any other questions for Mr. Hirschfeld or Mr. Tibbles? If not, we need to go through these individually, I guess, as we have them listed, and just Mr. Hirschfeld, we have them listed as parcel IDs. So if there are no following questions, if you have no more comments, Mr. Hirschfeld, I'd look for a motion on, we'll go through each one individually. The first one up is on our list here from the Frederickson and Byron is abatement parcel ID 1110-0300-0900 Dickinson Property Microtel. The current value by the city is $4,841,900. Let me find their sheet here. The property owners have requested an abatement value of $2 million. Correct, Mr. Tibble, right?
Right. That's
$2 million. So I would look for a motion, and we have, again, just to remind the commission, the motions that are acceptable, you can move to deny the request for a change of value, you can move to accept the abated value request for the property identified and change the value, or you can move to change the value of the property identified and change the value to a number that the commissioners so desire.
Mr. President,
Mr. Frederick.
I just one comment before I make a motion here. I think that, we've looked at these over the years, and, in 19 we realized that we had some issues with value, and we did what we were supposed to do. We hired an outside firm to come in here and tell us if we're doing the right thing, if we were right or wrong, and we made a lot of huge adjustments to some of these properties. So these prior years, we used the information we had to the best of our ability to come up with a value, and I think I'm pretty comfortable with where those are. I mean, I just don't see going back and trying to reinvent the wheel. when I think we did our part, and in 19, when we hired Vanguard to come in. With that said, I would make a motion to deny the abatement request on 1110-0300-0900.
We have a motion to deny
Second.
with a second. Any further discussion or questions? Hearing none, we'll vote. Mr. Frederick?
Aye.
Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye. Next property is the Dickinson Homestay, parcel ID 2500-0300-0400.
Mr. President, make a motion to deny that request.
We have a motion to deny
Second.
with a second. Any further discussion or questions? Hearing none, we'll vote. Mr. Frederick?
Aye.
Ms. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye. The next item or parcel up is the Lodge Pros 1150-0200-0102.
Mr. President, I make a motion to deny that request.
We have a motion to deny
Second.
with a second. Any further discussion or questions? Hearing none, we'll vote. Mr. Frederick?
Aye.
Ms. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye. Motion carries. The next item up is the Jefferson Apartments, parcel ID 1140-0700-0100.
Mr. President, make a motion to deny the abatement request.
We have a motion to deny
Second.
with a second. Any further discussion or questions? Hearing none, we'll vote. Mr. Frederick?
Aye.
Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye. The last parcel is Lincoln Apartments, 8021-0200-0200.
Mr. President, I make a motion to deny the abatement request.
We have a motion to deny
Second.
with a second. Any further discussion or questions? Hearing none, we'll vote. Mr. Frederick?
Aye.
Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye. I think that covers all your property, Mr. Tibbles?
That does. Thank you so much, folks,
Thank
for
you
your
for your
time
time.
and attention here. I appreciate it.
Point of order, Mr. President.
Yes.
Parcel 8023-0200-0200, I've got that down as Lincoln Apartments VL. That VL was supposed to stand for vacant land. That needs to be corrected. That parcel is actually land that is underneath the Lincoln Apartments, but at that time, because it's in a different subdivision, it wasn't included on the building permit, and it was missed. It has since been combined. So moving forward, we won't have this issue, but since they filed an abatement on this action, for the land that's underneath there, we need to vote on that one as well.
Okay.
Okay.
What's your comments on that?
Uh,
I mean,
It's the land that's underneath the apartment. It's valued the same as, well, in fact, it's carrying the same value. The land's all carrying the same value. So my recommendation would be no change. It's carrying the same
Mr.
value
Tibble?
as the land did.
Yeah, just one clarification. That is a great point. I should say on that property, the number that I'm showing, within our demonstrated value, kind of takes that into account there, just for perspective. Takes essentially the vacant land plus the land that the building is on. Those two separate parcels as one. Essentially viewing kind of an sort of a one economic unit approach. I don't know how often that gets presented here, but certainly if you need take action on that. Certainly, if you have any questions, happy to answer.
And you did file an abatement
Yes.
request for that?
Yeah, I do not have that in front of me, but we did indeed.
Okay, what we have listed here is the true and full value at
Yeah,
$222,200 and a request
Yep.
of $129,925.
That's right.
my only question is, when we valued the property, the land itself, did we assume all the property? And then we just caught this later? I mean, you have to understand what I'm saying. You're assuming that was one big lot that building sat on, and now we find out it's two separate lots. So did we already taxed them for what we felt that land was worth under that building, and now we're gonna, now we find out there's another piece that,
I do now understand. The property, the first one we acted on that starts with 8021 included all of the improvements plus part of the land. That part that was attributed to it in the building permit. So when we went out, you know, we put our valuation on the permit. However, I'll throw out a, you know, I guess say there's 10 acres under the one parcel, the entire thing would have sat on 20. And we only valued 10 initially, and then the other 10 we valued as vacant land when all 20 acres is actually under it. So to include 8023 with 8021 would be accurate and correct. We're not double taxing them, if that's your question, or double value.
And that's corrected now?
It is corrected. That's
On the
one
rolls?
parcel,
and when did we correct that?
either in 2018 or 2019's valuation.
So this is, how big of a parcel is this? Is it 10 acres?
Mr. Frederick, the entire parcel, and we have it for the current year, 2019, is 8.67 acres. So it's been something less than that. But the two together equals 8.67. It wouldn't have been 8.67 plus whatever the other one would have been. The land total will be accurate with them separate, and that's since been corrected. So the value of 8023 is now part of 8021. So 8021 has increased by that 222,000.
And maybe just to add, just in the, you know, hopefully trying to clarify things here. I agree. I don't know that there's any sort of double dipping here, right? It's two separate parcels for that taxable year. The number that we've requested essentially takes both of those into account. I know we had filed that application, for the vacant land, and that was valued much differently than the land with the improvements on that there.
Yeah, with that said, Mr.
Okay.
President,
I'd look for a motion on this.
regarding parcel 8023-0200-0200, Lincoln Apartments VL, I make a motion to deny the abatement request.
I have a motion to deny
Second.
with a second. Any further questions or comments on this property? Hearing none, we'll vote. Mr. Frederick?
Aye.
Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye.
Thanks
Thank you
again.
again, Mr. Bowles. Okay, Mr. Hirschfeld, you have, we're going to move on to the second item on, item B on the agenda, or actually item C to the amended agenda. And this will be the Roars properties. We have first up apartments, second marketplace, and then third vacant lots.
That is correct, Mr. President. I do have a PowerPoint for the vacant lots, but since we're starting with the improved properties to stay with what we've done, keep the conversation kind of in the same realm of where we've been, we'll go with the improved properties. I don't have a whole lot of comments to add to these that we haven't heard already. Same type of properties, same methodology was included in them. Maybe a little bit of comments will go into that Westridge market when that comes up. But at this time, I guess I'd like to turn the podium over to Ms. Shannon Roars-Jones and let her speak on her properties.
Welcome.
Thank you. Let's see. So thank you, Mayor Decker, members of the City Commission. A couple of things, first of all. I apologize for my lack of voice. Hopefully you have no problem hearing me with the microphone, but I am going to probably keep my comments fairly short so that I don't lose my voice entirely. Also, with the Commission's permission, I did not realize the order that was on the agenda as far as addressing issues. So my presentation is laid out in one presentation for all of the items, starting with the vacant lots, apartments, and then marketplace. And thank you, I appreciate that. And then I did put some handouts out for the commission members and for Mr. Hirschfield earlier. There's one very large page that looks like this, and then there's a smaller stapled packet of the recommendations from the State Board of Equalization for your reference. So, for the record, my name is Shannon Roars-Jones. I serve as the attorney for Roars Companies. Roars would like to dispute several properties or parcel valuations for the 2017 tax year. We did receive a few reductions as the result of the City Equalization Board process from April for the current tax year, which we really appreciate. We would like to make those adjustments retroactive and match the State Board of Equalization recommendations. First, I'd like to discuss the unimproved land that consists of 16 lots. Through the 2019 property tax protests, Roars had 16 lots that were reclassified as agricultural land, valued at $715 per acre. Those same lots should retroactively be classified as agricultural land for the 2017 tax assessment year. These parcels are near Menards that do not have any improvements, including roads or sewers. As a history on these lots, in 2000, and if you'd like, the chart across the top has got the history of the assessed values, if you'd like to follow that. In 2015, the lots were valued as county ag land. In 2016, Roars platted the land, which changed the zoning into commercial lots. As a result, the assessments increased from $23,700 in 2015 to $21,162,000 in 2016. During a protest where we pointed out the land was merely platted and no activity was happening, the city did agree to cut the valuations by 70%. The 70% reduction took the values to $6,871,500, which is where they have remained from 2016 through 2019. These are alfalfa fields that are being assessed at $100,000 per acre. During the City and County Equalization Board protest for the 2019 tax year held this summer, Roars pointed out to the city assessor that under North Dakota statute 57-02-01 that this land qualifies for ag land assessments. And the small chart to the right of the map has got the factors for that. The city assessor did agree to that on a couple of the larger parcels, which we appreciate. The city assessor also agreed to take the 14.97 acre parcel to a value of $11,000 and the 10.73 acre parcel to a value of $8,000. Since the classification should have remained agricultural in 2015 and 2019, we think that they should be abated for 2017 and 2018. The other unimproved lots were changed to ag zoning by the State Equalization Board in their September 2019 recommendation and approved by the State Board. I think there are 5 reasons why we should receive a reduction in valuation on these undeveloped lots to assess them as agricultural land. First, the current values are for unimproved alfalfa fields at almost $100,000 per acre, which is nothing close to market rate. Second, the only reason the land is valued as high as it is because of a mistake the city assessor made back in 2016 and failed to adequately correct when they thought the platted land meant it was developed land. Third, the city brought in an outside appraiser to assist in the valuations of improved land, which reduced the valuations by 50% almost everywhere throughout the city. It stands to reason that if improved land is worth half of what they thought it was, that certainly unimproved lots should be reassessed. Fourth, the state's law guidance on defining agricultural property conditions allows all of our raw land to be valued as ag land at much lower rates. Fifth, the State Board of Equalization agreed with our arguments and changed the classification for the 2019 year. The abatement request for these lots would be following state precedent on the same land, just retroactive to 2017. Excuse me, please. Moving on, I'd like to look at the apartment building assessments. So through the 2019 property tax protest process, Roars had Prairie Winds 1 and Prairie Winds 2 reassessed by the State Equalization Board. The same methodology should apply to the 2017 tax year. The 2017 assessment for Prairie Winds is $3,581,800, and for Prairie Winds 2 is $3,583,100, which seems to be based off of sales comparison or replacement value. The State Board of Equalization pointed to a methodology of using the income approach. In the 2019 State Equalization Board recommended are attached or are handed out to compare methodology. Valuation using this method relies on gross potential rent, less the vacancy rate, as Mr. Hirschfeld went through, capped at 10%, a cap of 45% of expenses, and a 7.9% capitalization rate. Since 2017 was the beginning of the bust and valuation decreased from 2016 to 2017, it stands to reason that an 8% capitalization rate is proper. Even a lower cap rate, say 6%, results in an assessment of nearly a $500,000 reduction in value. To stay consistent with the state methodology though, we used a 7.9% capitalization rate. At the protest this spring for the 2019 tax year, the valuation disputes were denied without any reason or explanation. We would just like some justification on why our units are valued so high. We were told in the past it's because Roars builds such high-quality properties. This is a compliment to our face, but a punishment to our bottom line without any justification as to why. We've provided our income statements at our occupancy rates. Even at 100% occupancy, we can't do business with a valuation as high as the city assessment. The city assessor has told us that he's seen units in Dickinson sell for over $100,000 per unit, but we don't know where these comparisons are coming from since the bust in recent years. We have seen units sell as low as $30,000 per unit. We've given our information, but we've not seen the comps that the assessor has claimed to have seen. We built in the market when the market was hot for a high cost, and now we're being taxed at the same rate. This is not the reality of the current market. Next, Westridge Apartments are valued at $20,093,300 for 2017. Through the 2019 property tax process, Roars had Westridge Apartments, which is owned by DAB LLC WR1, which is how it shows on the data, reassessed by the State Equalization Board. This same methodology should apply to the 2017 tax year. The 2017 assessment is $20,093,300, which seems to be based again off of the sales comparison or replacement value. The State Equalization Board used the income approach again for this property. The Equalization Board recommended valuation method relies on gross potential rent, vacancy, expenses, and using a 7.9 cap rate. Since 2017 was the beginning again of the bust, the valuations decreased. It stands to reason that an 8% cap rate is extremely conservative. To stay consistent with the state methodology, a 7.9% cap rate was used. We do have an appraisal dated November 2018, which shows a value of the building of just over $10 million, just for reference of where current values are at. We certainly appreciate that the assessor decreased the larger apartment buildings for 2019 by 10%, but a 10% reduction across the board seems very arbitrary. Rather than just cutting percentages, we'd urge the city and county to really look at the baseline values for the buildings. We built the buildings when the market was in boom times and labor and costs were much higher than they are today. It's not reasonable to expect that the high construction cost of a building in a hot market is equal to the actual market value of that building today. I think there's a few arguments for reducing valuations on our apartment complexes for Prairie Winds 1, 2, and Westridge Apartments. First, we have actual income data of what was received. The city assessment is based off of the opinion of one person. Second, the city recognizes that it's overassessing. We were offered a 10% reduction on the West Ridge complex in 2019 because they were decreasing the values of all complexes over 100 units. We don't know what the rationale is behind that, other than they were trying to minimize the blow to the city's budget, which is understandable from a municipal budgeting perspective. But from a business perspective, that's not fair market value. Third, Third, judging by the number of properties that were disputed at this summer's state equalization meetings, you likely recognize that there's a problem with the fairness of these assessments. I don't think that the assessor is being malicious, but I don't think that the data supports the numbers we're being asked to pay. We are not unique in our request for you to look at the fairness and approach used here. We have data showing that the numbers don't pan out. If we want to dig into cap rates or sales comps, that's fine. And our accounting team is happy to work with the assessor if that will be useful. But in the past, we were told that they didn't even use that data. We feel like we're starting at a place where we give all of the information to the city, and then the city assessor attempts to discredit our information, discredits how we run our business, including questioning our cost of business, and says that if you didn't complain last year, you must be fine with the valuation. Fourth, the State Board of Equalization agreed with our requests in the 2019 year, and we're asking for fairness and consistency in that same methodology being applied to the previous years. Finally, let's move to our last property, Westridge Market Center. This is a strip mall near Menards that is currently 25% occupied. In 2017, it was 50% occupied. We appreciate that the city assessor worked with us to reduce the valuation of the market center based on the vacancy, and we would request that those same adjustments be made for 2017. Through the 2019 property tax protest process, the valuation of Westridge Market Center was reduced at the city level to account for vacancy. The 2017 assessment is $5,542,500, which seems to be based again off of sales comparison or replacement value. Since this is an investment of commercial income, an income approach is much more appropriate. Following the State Equalization Board methodology of gross potential rents, less vacancy, plus income, 45% expenses, we calculated a valuation based on a 9.9% capitalization rate. This is 2% higher than the multifamily being requested, but it's due to the nature of the investment. This is a conservative cap rate for this volatile market that we have here in Dickinson. In conclusion, we have tried fighting the assessments before, and I understand that there was not much progress going the litigation route from the 2016 abatements. We've also tried the dispute process and escalating up to the State Board of Equalization, where they agreed with all of our requests. We are heavily invested in Dickinson, but we want to make sure that the numbers work. Rohr's Companies owns over 260 parcels of land in Stark County, and we are here disputing 20. In Dickinson alone, Rohr's Companies pays more than 6% of the city's commercial property tax. My brother and his family moved to Dickinson to run a division of our construction operations, and they are committed to this community. But we also run a business, and we have investors, and we have loans, and we need to make sure that the numbers make sense. We are committed to Dickinson and Stark County, but if we're not able to get the property tax situation under control, the investors are willing to let some of the properties go into foreclosure. We cannot continue to subsidize the city of Dickinson and Stark County when the market simply does not support the numbers. Thank you.
Thank you, Mrs. Rohrs-Jones. Any question? Mr. Hirschfeld, any comments?
Mr. President, thank you. Mrs. Rohrs-Jones, I have a question for you, and I'm not going to go down the path of, I understand how you're requesting the value are, so outside of that, Prairie Winds 1 and Prairie Winds 2, and I've been through those properties, and as near as I can tell, those two properties are nearly identical. Is that correct to the best of your knowledge?
To the best of my knowledge, I think they're very similar.
Okay. And Commissioners, if you look at the abatement sheet here, that shows up in the cost approach as well. It would be abatement number 19 and 20 for the Prairie Winds 1 and 2. The valuation and the true and full in 2017 is $3,581,800 and $3,583,100 for Prairie Winds 2. So I mean, within a couple $1,000s of each other. And going back to what the state did, and I don't want to say there's an error. I haven't seen their information, but in proper appraisal practice, when you use the income approach, you use it using market, and market comes from data supplied by property owners. And so if, you know, the Roars properties are renting for this, the Royal properties are renting for that, you know, and you get several points of data, and then you say, here's the range from $1,000 unit, $1,500 unit, just pull numbers out. They're much less than that now. But the bulk of them rent between $1,250 and $1,300. So all things being equal, management can do what it likes. The market rent is $1,250. But if you look at Prairie Winds 1 and 2, there's a $200,000 difference as established by the state board for identical properties. And it's because they used actual income and not market income. And they should be identical. And if I may, if I remember these properties accurately, part of the reason is one of the units was taken out of service in one of the buildings and turned into a gym that both buildings can use. Does that sound correct?
Mr. Mayor and Mr. Hirschfeld, I do not know the answer to that question.
And so it goes, you know, in my opinion, when we value these properties, they should carry a very similar value, if not identical, even through the cost approach, because management decided to take one unit out of service that could earn money, where if it was sold, somebody else might put that back into service. But the one that's out of service being used as a gymnasium services both buildings, so there's a benefit to both buildings. And I think we get an inequitable assessment using the income as it was used in this manner. And that's outside of the cap rate, which, you know, on a different set of properties, I showed you that the state is off 25% from the data supplied by Vanguard Appraisals. And that's where I start having issues with using 2019 data to go back to 2017 is, you know, first we have to assume that what the state came up with is accurate and it's their value, it's what they did, and that's how the process works. But then to go backwards to 2017, in my mind, doesn't result in an accurate valuation for that year.
Okay, any comments or questions for Mr. Hirschfeld?
Mr. Mayor, may I respond
Yes,
to that?
yes.
Thank you. I understand the hesitancy to use 2019 numbers to work backwards to resolve discrepancies in 2017 and 2018 numbers, but I think if we're looking at the market from 2019 versus 17 and 18, you all live here. I think you'll understand and agree that the market in 2019 is better than it was in 2017 and 2018, at least as far as the numbers or our ability to fill and increase, which increasing rental rates in these properties is starting to happen just a tiny, tiny bit, and vacancy rates are improving. But the numbers from 2017 and 2018 are significantly worse than the numbers from 2019.
And Mr. President, Commissioners, I wouldn't argue with that. However, as stated earlier, the information that this office had for the 2017 valuation pertained to the 2016, 15, and 14 valuation years. And in 2014, I mean, your group is aware that what the market was because you sold properties that year, and it was significantly higher, and so we were still anchored to higher values as we go down, and we were able to shed those sales the next year, in which assisted in us decreasing values over time.
Mr. Mayor, may I respond to
Yes.
that? Thank you, Mr. Mayor. Mr. Hirschfield is right that the market was very, very different in 2014, 15, and even 2016. And that's why we think it's so important to be using the income approach to value these properties versus the cost approach, because the cost doesn't change dependent on the market. The cost is consistent over time, while the amount of money that you're able to generate from these properties, or that you're able to sell these properties for, changes based on the economic situation here in Dickinson from year to year. And so that's why I think it's even more important that we go through 2017 and 2018 and reevaluate those properties using the income approach and not the cost approach.
Okay. Thank you, Mrs. Forrest-Jones. Commissioners, any questions, comments? I just have, I guess my one comment or question, Mr. Hirschfeld, on the lots. The original designation that, boosted the values, was your department at that time under the understanding that that land was going to be developed, or just because it was platted, you reclassified it as non-ag, or valued it as non-ag?
Mr. President, there will be much more to come in regard to the vacant lots. But specifically to your question and what caused the first decrease, was that land was platted, and the zoning was changed, and the information we had at that time showed the as-builds for infrastructure showed that infrastructure was in place. And so we valued it as such. And then when the Roars Group came to us and, said, no, that's not done, we verified with building and codes and engineering that was correct, what they said, that infrastructure wasn't in place. Then we made the decrease, and we put additional obsolescence on for the infrastructure not being in place, and we went through that abatement and decreased the value off based on that information. However, we still considered that property, didn't consider, it was platted and it was zoned, so it was more valuable than what ag land was, and there's going to be more discussion on that, if you will, with the PowerPoint that I have, because with what Mrs. Roars-Jones has shown and what my opinion is, it comes down to a definition or a couple of definitions, and a disagreement I have with how state staff defined a couple of words and my understanding of that same definition. So if we can finish with the improved properties
Okay.
here, and then
Do
we'll
you have any comments on, besides the apartments? You said you had comments pertaining to Westridge Market?
The thing with Westridge Market, and Mr. Roars-Jones brings up the good point, with not a lot having changed, we did put obsolescence on the land as well as the building. The building has never been valued as being complete. It's always had obsolescence for being an incomplete building. But the first time we looked at that, the first time we got the information on that, my office, and we'd requested it last December, was the night of the meeting, if you recall, that Mr. Easton dropped all that information off to us. I had never seen that before. And so we'd recessed that meeting for 2 weeks while, Mr. Ayler from Vanguard and I sat down that night. We continued to work on that and brought a different valuation back at the next meeting. And so I didn't have anything to go off of for 2017. And, if it's the board's wishes, we can certainly go back and add that obsolescence to 2017 and 18 that we was placed on the land. I wouldn't necessarily argue with that, but that information as far as what they were earning, the earning capacity, what amount of obsolescence put on, wasn't available to me in 2017.
Commissioners, you feel that would be appropriate for that? Okay. I likewise would not, because of the information that was made available. So that value then for 2017 would go to what you have assessed in as 19s?
Mr. President, we could certainly make that a whole dollar amount tonight, or we can change it with me, and I don't have those numbers in front of me, make a percentage change. We wouldn't have that value, so I don't know if we want to come back.
Well,
to that.
our assessed value, and I'm pretty sure this is the city's assessed value, 2019 is 3.456.
That's correct. I just don't know if there's any other market adjustments that might have been made during that time. I don't believe there was for this property. So I want to make sure that's accurate, but if it's the will of the commission to go with the 2019 value for 17, that would be okay. They didn't ask for 2018, but if it's acceptable to ownership, I mean, we can amend that and put that value on for 17 and 18 and would keep them from having to come back next year.
I'm okay with that, Commissioners.
Do we need that in a motion?
Yes.
Mr. President, I would make a motion for the Market Center that we apply that obsolescence to, and that parcel number is 2505-0400-0600, which would allow us to drop that to $3,456,300.
We have a motion
Second.
And that would be for 17 and 18.
for 17, 18. You still second?
Yes.
Okay.
Point of order, Mr. President, is that acceptable for 18 as well? Because 18 wasn't the valuation year. You didn't abate 18.
Mr. Mayor, Commission members, I certainly would have to verify with the owners. I can't speak on their behalf as far as 2018, but it's certainly an improvement, and we appreciate that.
I mean, if they decide to come in and abate it, I guess we'll deal with it then.
And if it's acceptable later, I mean, I can correct that and do a correction with the county at that value. If it's still acceptable to them, we'll save this step anyway.
That's fine.
We appreciate you at least considering an abatement for both of the years. I'll have to verify with the owners that whether or not they would want to try and abate that further.
Okay.
I'd still stick with my motion.
Okay, so we have a motion to adjust the valuation for the years 17 and 18 to $3,456,300 with a second. Any further discussion, questions? Hearing none, will vote. Mr. Frederick?
Aye.
Ms. Walla?
Aye.
Mrs. Trustum?
Aye.
Chair votes aye. Motion carries. I guess we'll move on to the unimproved land. Mr. Hirschfeld? You said you had a PowerPoint?
Mr. President, I do. And on, if you look next to the aerials that Mrs. Rhodes Jones has provided, she also has listed the 7 criteria as 1, 2, 3, 4, 5, 6, 7. If you'd like, if it's easier, if you beside that put A, B, C, D, E, F, and G, that's how I've set up my data.
Is there any way we can get these backlights on? I can't see. It's the ones back here.
behind. All right.
On, not off. There we go.
There you go.
Thank you.
And the criteria is abbreviated a little bit there. I'm going to read it straight from Century Code. It's in Code 57-02-01, Section 1. Property platted on or after March 30th, 1981 is not considered to be agricultural property when any 4 of the following, and there's 7 conditions exist. The land is platted by the owner, is number 1. Number 2, public improvements, including sewer, water, or streets are in place. Number 3 is topsoil is removed or topography is disturbed to the extent that the property cannot be used to raise crops or graze farm animals. 4 is property is zoned other than agriculture. Number 5 is property has assumed an urban atmosphere because of adjacent residential or commercial development on 3 or more sides. And number 6 is the parcel is less than 10 acres and not contiguous to agricultural property. That "and" is going to be huge in how we move forward. It certainly was with the value I took in 2019 and the state's, the attorney for the state staff's recommendation. And then the last one is the property sells for more than 4 times the county average true and full agricultural value. So if you look up at the screen, there's the properties in 2012. You can see it's quite easily in this one here that we've got ag land there that's got some stubble in it. The purpose of the red lines will come into play later. And here I just show the chart of all the properties with the ABCD through F. Note that I've gone out of line a little bit. I've got A, D, B, and G. And the reason for that is A is the land is platted by the owner, and that's true. And state staff shows that as being true. I skipped to D because similar to being platted, D is the property has been zoned other than agriculture. And that's true for all of those. State staff also has said that's true. We go back and pick up item B. The public improvements, including sewer, water, and streets, are in place. That is false, so we don't give a score for that. And that is consistent with what state staff did. And then G, I picked up the last one, property sells for more than 4 times county average true and full. That is considered to be a true statement, and the state staff also considered that to be true. So at this point, we've got 3, and we only need 4. And so the recommendation by state staff to the State Board of Equalization was these are the only items that it was marked true out of those 7. But disturbed soil, and I've got a couple other definitions in there, but soil that has been changed from its natural condition by excavation or other means. I Googled that, struggle to find a good, quick and easy way to get that definition, but this one comes from Sacramento State's College of Engineering. I have one from FEMA, and I have another from NCRS that's in your binder. NCRS basically says disturbed soils whenever you do something to the prairie. So if you run a plow in there and drill seed, you've disturbed it. FEMA's definition, a little longer, but in essence says the same thing that we have here. This is the aerials that was given to the city in 2013. And I apologize, the picture or the print screen didn't come out very well, but we do have the actual website available that will come up here in a little bit. But as you can see here, I mean, the Menards building is going to be right here over on this edge, so we're just to the west of Menards. We've got the parcel numbers that are consistent with Westridge 2. But if you notice this line that goes right up here, that is where the land was excavated, leveled, soil was disturbed by mechanical means, that being scrapers or an earth mover, and that line is spot on with the Westridge first subdivision before it was replatted. And so then we come back in, and it was hard to see on that, but all of those had been disturbed then except for these 2 lots up here, which are big lots on that were on the, are these 2 lots here. This lot will be one of them, and then there's another one that's off the screen. So based on the 2013 aerials, we can show that the soil had been disturbed. And then this map was from 2014. You can readily see that Menards is there. We've got soil being removed here, soil that was removed here, and this here's for a future slide, but there currently right there is a topsoil pile. There's the 2016 map, the aerials with that pictometry gave to us at that time. So we can clearly overlay the parcels with the imagery. And so with that, this disturbed soil there goes to this parcel. The other two, I mean, there was a little bit of the disturbed, but being conservative, we left those be. And then we come to our final criteria, F. Well, the E is there an urban atmosphere? There's no urban atmosphere. It's not built around 3 sites, so that's a false statement. But then F, where the parcel's less than 10 acres and not contiguous to agricultural soil. It'll be easier to see in the next, or when we put the website up, but none of these lots are contiguous to the agricultural property that's over here. And so I come to all of the parcels having 4 or more criteria except for this parcel. In 2019, if you recall, this parcel here, I also classified as a 3 because at this time, that hole has been filled in. That's what's visible, so I didn't think it had been disturbed. But you can see in this one that excuse me, that soil has readily been disturbed. There's a ponding of water there. And then it all goes back to agriculture. There's the NRCS maps, and pretty fair idea. The soil that was mapped there is no longer the same as what's there currently. All right, and Mrs. Kirschenheider, if you could pull up, let's start with the Google Earth.
Mr. President?
Mrs. Trustin?
Mr. Hirschfeld, was this information shared with the State Board of Equalization this year prior to their decision?
Some of that information was, most of it was not. We did do a physical on-site visit where they've been removing the soil was readily visible, where the topsoil pile, change the topography was readily visible. Google Earth is available to anybody, so I don't know what further in-depth study they did to arrive at their valuation. I don't know how they got to where they did. And other than the one parcel, I mean, we value these properties fairly consistently throughout the years.
Did you visit with them at all to clarify that?
With state staff? Mm-hmm. I have not yet, no.
Thank you.
And then a little bit better photography here, we can toggle through. I think she's got it at 2012, but we can move forward. You can see the changes that occur. I think if you just click on that arrow over here, that may be the easiest. I'll skip ahead for you. If you could slide that a little bit, please. And hold right there for a moment. As you can see, that trailer, we all remember the trailer being there, that the advertising trailer that the Roars Group has. I think the next slide will show that that pit's grown to the point where that trailer is now over here. And if we pull up the pictometry, that 2013 imagery, we can zoom in to the point where we can see the tracks left by the excavator. It's just when you get to 2019 doing this stuff from 2017, and some of this work was done in 2013, we're a long ways away from the beginning of this process, and it's hard to remember everything that's occurred. The 13 imagery. If we just scroll, if you can pull down here, if you can see that light down here to the bottom, and pull that up, there we go. And I think we can zoom in, but you can quite easily see the excavator tracks, and it goes all through that, but and it follows right along where the West Ridge 1 plat was, and this is what's now West Ridge 2. So based on that imagery, I'm comfortable with saying that topsoil and topography has changed on those parcels.
So your recommendation here that we have is that the one parcel would be reduced from 1.3 million to 8,000.
That is correct. We'd go back to ag line value on that. I would also,
All the other ones would not change.
that would be my recommendation. And if we want to correct 2018s as well for that parcel, I would be in favor of that. And we can get that one taken care of as well, because if it's accurate in 19 and accurate in 17, then we need to change it for 18 as well.
Okay. Any questions for Mr. Hirschfeld on this? And Mrs. Roars-Jones, if you have any comments?
I guess my first comment, looking at the aerial views that we have, especially from the image from, I think you said it was 2013, the lot on the far western side, the largest lot that is 2610150000100, where you say that there's an excavation in a pit. It appears that that has been there for a number of years, and to my eye, and granted, I'm no rancher, but that looks like it would be a stock pond or something of that nature that would have been there, not created by Roars or excavated. It would have been something that existed on that lot when it was still agricultural land.
And that is a valid question. However, the 2012 imagery from Google Earth shows that all to have been dry land farmed through there, and that's if it would have been a stock pond, that's not there. It's all one level that property was.
Okay, Mr. Mayor, if I could continue though.
Yeah.
I mean, just because it wasn't there in 2012 doesn't necessarily mean that it's not a stock pond. We have been and still continue to lease out this land for either grazing or cultivation. And so I guess I would just point out to the commission that just because there's a pit there doesn't necessarily mean it was disturbed for commercial purposes. This land is currently leased out for agricultural purposes.
And Mr. President, if I can, if we can get the lights and go back to the Google Earth, that 2012 map, and we can scroll out and look at that entire parcel.
Can you move it further to the west, which, there. Then advance it from there. You could drag it back to the east then. Because you can see that as visible stock pond there.
But that stock pond is not on
Right, that's
on
why
Roars land.
I'm saying drag it back, so.
Correct.
Something was taken from that low area there.
And so it's that visual that's played into, to my opinion. So somebody sees different information there, or takes a different opinion of disturbed, and
My concern is why the state did not have this information or delve into it deep enough to, I mean, this seems pretty simple to me, using Google Earth, to seeing the transformation of the land. Mrs. Roars-Jones, you have any other comments?
Yes, Mr. Mayor. I guess what I would say is that despite the fact that the aerial imagery appears to show that the land has been at least driven across, perhaps there was scraper work that was done. For sure, we can see the tracks that it's been at least driven across. If you look at the land today, the only thing that you're going to find is a small, well, that's subjective, but a pile of topsoil that has been dumped onto that land. You're not going to find that anything has been dug out in preparation for underground utilities. You're not going to find the land is significantly changed from the way that it was when Roars acquired it. Nothing has been done to improve that land, and so that's why we do believe that the state test, the requirement to meet 4 of those standards has not been met. The excavation, I mean, if you say that someone drove across it and just moved, the smallest amount of dirt, yes, then you can probably say that it has been excavated. Certainly, it's been driven across. But if you look at the land today, you're not going to find that it's substantially different than when Roars bought it. Certainly not all of the lots, or 15 out of 16?
Mrs. Trustin.
Finkel? Yes. Could you provide us your legal analysis of number 3 regarding the interpretation by the state in the staff report for the 2019 State Board of Equalization?
Yes, Ms. Upton, and Commissioners. I did have a chance to look at this as I anticipated this was going to be an issue this evening. I, too, did some research to determine whether I could find an acceptable definition of what is considered to be disturbed soil. Unfortunately, there's no case law on point for this, so we kind of have to look a little bit outside of the box. In addition to that, looking at the subsection 3, as it specifically states, topsoil is removed or topography is disturbed to the extent that the property cannot be used to raise crops or graze farm animals. So it's not just one or the other, it's both. And so I think that you kind of have to look at it collectively, that yes, there may be just some disruption, but also to what's the extent of that disruption as well. I guess at looking at from a legal perspective, to visit with the state perhaps, because it is a little interesting that they didn't rely on some of this information, or maybe did, but maybe looked at it a little bit differently. So there's always the possibility that the city could table the issue, have Mr. Hirschfeld visit with the state, get their input on the issue, bring it back before the board so that you can have that information available to you in making a decision. Legally, you're not required to do so, but unfortunately, there's nothing on point that discusses this specifically as to what is to be described or defined as disturbed property.
This is let's say a 50-acre parcel, and they disturb 2 acres of it. Does that kick it out then, or?
I think it's going to be based on a factual determination of what you feel is going to be appropriate. The one concerning thing that I have in sitting and listening to Ms. Roars is they're indicating that the land is currently being leased for agricultural use. So that might be something that needs to be addressed, because again, the requirement is not only is it disturbed, but it cannot be used to raise crops or graze animals. So it's a conjunctive test. so to speak. So I'm not exactly sure to the extent Mr. Hirschfeld had an opportunity to visit with them about that, but that might be something that the city feels or deems appropriate in making its determination.
Mrs. Rose Jones, you said they're currently renting it for a hayfield?
Mr. Mayor, I will have to verify the use. I believe in the past it has been used for both grazing and haying, but we've got a number of parcels, so I need to verify which ones exactly that would apply to.
Well, when I drove out there, I didn't see a fence.
Okay.
So I would say unless they have some well-behaved cattle, I would
Th-
say.
then that would
there's
not be
no-
the case
there-
currently.
There are no grazing going on. And I noticed that the pit on the south side of the property is being used people are taking dirt out of it. And I think
That
you
is
noted
correct.
that also.
Yes.
At $1 a yard. Could you go back to that slide on your PowerPoint, Mr. Hirschfeld, on where you broke down all the criterias, the 7 criterias? Because if we want to throw the topsoil disturbing out, I think we have some parcels there that possibly fall into the, go back, go complete that all the way through. So if you stop right there, you probably have 4 more parcels if we're going to debate topsoil being disturbed. You probably have 4 more parcels there would fall into just 3. Am I correct?
Mr. Chair, President, Commissioners, that's where we start getting into the gray area of the word contiguous that's in the criteria. Is if some of these parcels go back to being ag land, then there may be some properties that are contiguous. And my input on the disturbed and agriculture is, and I don't know everybody's background, before I came here, that was my occupation. I was born and raised in agriculture. And so why I put the soil study, the Web Soil Service map up there is ag land is bought and sold based on the productivity of the soil that's classified there. And so if it's changed and maybe only an inch of soil was put across there, maybe they moved several feet of soil. I don't know. I don't have that answer. So we can see the scraper tracks. We know it's changed. So the soil that's in that soil survey is no longer accurate. And yes, they may rent the property out, but what is the productive capacity of that soil? Is it still actually earn money? Do they rent it out for $1 an acre just so they don't have to spend money mowing it? Can it actually grow a crop? I mean, we see weeds grow in the cracks of our sidewalks. Stuff will grow out there, yes, but is it agricultural soil yet? I don't know that it is. I don't know that it isn't.
So C is, I'm just looking up here at C. And
Mr. President, that is the one I said this whole thing will hinge on.
Mr. Mayor, may I make a clarifying statement? Based on what Ms. Winko said, it's not whether or not the land is being used for agricultural purposes, it's whether or not it can be used for agricultural purposes. And so regardless of whether it is being leased right now or whether there are fences up, the question is whether or not that could be leased or fences could be put up. And so I think what you need to look at is all of the land and say, is any of this unusable for agricultural purposes?
would that be correct definition, Mrs. Winko?
Correct, Mr. President, Commissioners. It's just another way of interpreting how the particular part of the statute is written, because it is, again, written in such a way that it has to be disturbed, but it cannot be too disturbed that it cannot be used for raising crops or grazing farm animals. I think the question...
And it's an and/or, right?
It requires both, essentially, that you have to have it so that there is disruption to the extent that that disruption prevents the use of the property for raising crops or grazing farm animals. So I think Mr. Hirschfeld, based on his definition, would be accurate in the fact that there is disruption on the property. There's the distributing of the soil. I guess the question would be then a factual determination on whether that disruption prevents the use of the land for raising crops or grazing farm animals. And the answer may be yes, the answer may be no. I'm not able to tell you that based on the information that I have available to me.
And if I can throw another word into that, my interpretation as a former ag professional would be economically. I mean, you can have a cow or a goat chase across any open land, but if you can't do it economically, then, you know, the property's been disturbed to the extent that it cannot be used to do that, because it would have to be economically done, in my opinion.
Mr. Mayor, may I ask for clarification on that? Ms. Wenko, is the word economically in the statute?
To answer your question, Ms. Roars, it is not based on the explicit reading of the statute.
Thank you. So, Mr. Mayor, I would just suggest that that the Commission has been very deferential this evening to the opinions of the court as it relates to what is and what is not in statute. And so I would appreciate if the Commission would read the statute for what is in it.
Again, I come back to this chart, and I just see two properties that would probably fall down into threes, and that's the two top properties, along with the one that has already been recommended by Mr. Hirschfeld to be changed. The other ones, even if we took away the topsoil argument, we'd still have four.
Mr. Mayor?
Yes.
I apologize, but I believe if you take away the topsoil argument and you lose element G, I think it is on, then the other element as far as contiguous with agricultural land also fails.
And I'm, what troubles me is how the state came to there.
Mr. Mayor, I can recognize your frustration with the fact that it appears that they didn't look at the pictures that Mr. Hirschfeld has shown us, but I would argue, and if you wanted to call the state, I think that what they would say is that they read the statute like Ms. Wenko did, and they read the statute for that element to say that it must be that the topsoil was disturbed and it's unsuitable for agricultural purposes. And I think if you read it that way, then I think they did do the proper analysis.
I mean, it's splitting hairs, there's no doubt about it. I mean, just because you take the topsoil off doesn't mean you can't graze. So
No. I guess
you can't grow crops, but
right.
you
Well,
can grow some kind of grass there, I guess, but
I guess you could grow weeds. They grow, and goats eat weeds, so
I mean, in my opinion,
we could keep connecting 6 different.
in my opinion, the top properties depicted here, I don't see any argument there. Those have been disturbed, they're contiguous with other commercial, they're right in a row. The one property I have an issue with is the 26101 400 1800, which is this little square all by itself. I mean, you're 10 city blocks away from the nearest street. So,
And you could, by eliminating that one, you can make it contiguous to the south side, is basically the argument.
I mean, that's the argument. I mean, I can't get behind saying that that one is done right.
Okay, do you have any other comments, Mrs. Forrest-Jones?
If Ms. Wenko had a comment, I'd like to hear that first.
Mr. President, Commissioners, I don't know if you had a chance to look, but there is a staff report for 2019, the State Board of Equalization, in the packet. I believe it's maybe the 3rd page from before you hit number 2. It's the best indication, and it's not a whole lot of information, but the state did give some sort of insight as to number 3. Now, this is not going to be a full-blown analysis, but as you can see there, they had said that on number 3, topsoil is removed or topography is disturbed to the extent that the property cannot be used to raise crops or graze animals. They found that to be a no. The topsoil has not been removed from any of the smaller lots. When the dirt work for Menard's parcel commenced, they added it to the 27.43 acre parcel. Currently, the public has been removing the black dirt at $1 a yard. The path is visible on the map provided. According to the appellant, the majority of the parcels are rented to a farmer to cut hay. So that's a summation, I think, of what the state had come up with. Now, what exact information that they were relying on in making that determination, I don't know. But that's a summary of their position
Right.
as to subsection 3.
Okay. Ms. Rose Jones, you have any other comments?
I do, Mr. Mayor. So, Mr. Mayor, members of the commission, I guess what I'm asking you to do with regard to these parcels is to follow the law. The commission pointed out in regards to valuation methods that it's not clear, that the statute is not spelled out whether or not there's one methodology that should be used. It leaves that choice in the hands of the city and the county as far as choosing which valuation methodology you use. But with this regard, with this test, the law is clear. It's spelled out is explicitly in 570201. And I would say that element on my sheet, number 3 on Mr. Hirschfield's, I believe it's G, fails because it doesn't meet both elements of whether or not the topsoil has been removed and whether or not the property is suitable for agricultural use. So because of that, I would say that the element number 6 on my chart, and I believe it is F on Mr. Hirschfield's chart, also fails for lack of being contiguous to agricultural land. And so I would request that the commission goes with our recommendations for changing these properties back to agricultural land, these parcels back to agricultural land.
And the values you came up with, the requested values of $1,000, that was based upon,
The valuation for agricultural land, Mr. Mayor, is stated that it should be $750 per acre.
Mr. President, Commissioners, I do have one quick question for Mr. Hirschfield. Were you provided any information in assessing this property with regard to how it was currently being utilized for potential ag land or leasing or anything of that nature?
Mr. President, Attorney Wanko, comments similar to what Mrs. Rose Jones has made has been brought to my attention. As a former person farming and ranching, in doing this assessment now, I would like to see the lease agreement. Having been in the business, it would not surprise me if they're not having to hire somebody to come in and do that, pay them to do it instead of leasing it, because I wouldn't ruin my equipment, chase around for no more than what is there. And I think that's where raise crops and graze farm animals comes into, because the assumption is, where I said the economics not in there, but raise, when you're raising something, you only do it for economic purposes with agriculture. You don't do it to lose money. And the other two comments I have is, this hearing is the first step in the abatement process. The county will hear this, but also it can go to district court, and the court can then give their definition of what disturbed is, what contiguous is, what agriculture is. Because contiguous, with the platted lots in there that belong to the city, none of these are contiguous to ag. So, you know, by definition of contiguous, they're not contiguous to ag. Well, unless we throw out the fact that, you know, we're not going to consider the city street easements in there to be a barrier. You're picking nits.
But it's a street that's not built.
Correct, but when we talk about specific language by law, and that's where we can sit here all night, it may be easier just to make no decision, or to leave the values on there and allow it to go up to the court level and let them decide, or ask for an AG's and Attorney General's opinion on what this means, if it means making sure we get this right.
But it looks like the state's already said we were wrong. They've already changed all the values.
The staff for, excuse me, the comments that I got from state staff was their recommendation to the state board was based upon the attorneys available to the state staff and how they interpreted this. So we don't have a court's interpretation. We don't have an attorney general's interpretation. We have an attorney for state staff. That's how they read this into it. And not saying that it's incorrect, but in my opinion, it's not accurate, but I'm not an attorney either. But there's certainly those in this process that will be able to make this decision.
Okay. Anyone have any other comments? Mrs. Rose Jones?
Mr. Mayor, I guess the first comment I would make is we certainly want to avoid having to appeal this up to district court. That's a very expensive process. And obviously, the differences in these tax amounts are significant for our company as it is. And so we would rather work with the city and work with the county to get these properties' valuation in line with what they truly are, which is agricultural land. And I apologize, I had a second point and it's gone now.
I've been there. Any other comments? Mrs. Trustum?
Mr. Hirschfeld, you've commented multiple times this evening about receiving an AG opinion. What does that process look like? What's the timeline? And are we able to make that request and still follow our obligation with the Board of Equalization?
Mr. President, Commissioner Trustum, and maybe Ms. Winkle's better to answer that, but
Yes, I can answer that, Ms. Trustum, Commissioners. We can request an AG's opinion. It will depend on whether they feel they have jurisdiction to answer this particular question. Sometimes they can turn those AG's opinions around relatively quickly, and sometimes it may take several weeks, a couple months to do that. So I can certainly put in a request. I don't know the deadline specifically on which Mr. Hirschfeld is working from, but I can certainly inquire and make the request if the city decides to table this issue for whatever reason and get as much information as possible.
Well, Commissioners, hearing everything that has been said, does anyone have any properties that they feel that the argument has been made that they should stay the same or actually change? We have one here for sure, 2610, 1500, 0200, that the assessor has recommended that we change it to a valuation of $8,000.
Which one?
Am I correct, Mr. Hirschfeld?
Mr. President, that is correct.
Okay. So, with that being said, are there any other properties that you feel that would meet the criteria? I know, Commissioner Frederick, you have stated that there are some that are contiguous to commercial and private property, while others may fall into the block of still being contiguous to ag.
For me, I just look at the continuation of a development. Any of those lots in that top half, you can develop, you can sell, and somebody can build, and you can extend the road a little bit and sell. You take this lot that's way out here in the middle of nowhere, you're not going to bring a road all the way out there to sell that lot.
Just for that, yeah.
So I have the top 6 or 8 or whatever that are in there. I mean, you can go one lot at a time. In fact, they're in the process of doing that as we speak. So we know that's possible. But this one that's an outlier that sits all by itself, I'm not sure why there's a little lot out of this big chunk of this 27 acres either. I mean, that's another one. I mean, you're not going to build.
Well, that one
You're not going to build a mile of road to get to that lot.
Well, that one has been, under Mr. Hirschfeld's recommendation, been lowered, that chunk out there, so.
So, I mean, so I can get behind the argument on some of these, but the ones that are easily developed and contiguous to the commercial that's already there and the plan development that they're working on right now with the city, I have a hard time reducing any of those.
Mr. Mayor, may I comment on that?
Yes, Mrs. Earl Jones.
Thank you, Mr. Mayor. Mr. Mayor and members of the committee, I guess I would like to know what the definition of easily developable is, because right now, you know, this land is all flat dirt. The only roads that exist on a document that is recorded with the recorder's office in the, you know, it's in the internet. So the only roads, the only infrastructure that exists is in the internet. It's in the air. Correct? So the easily developable, you're not going to develop one lot at a time. If you're going to do anything, you're going to put in the whole underground sewer system, the water system, the electrical systems, the roads, the street lights, all of those things are going to go in at the same time for all of those lots. It's not
Mrs. Roars-Jones, not to interrupt you, but you're doing it right now. You're doing it with two parcels, 2,800 and 1,200. You're developing that into residential lots. So, and you're extending Westridge Drive probably 200 feet, 200 or 300 feet. So you guys are in the process of doing it right now. And the street behind it, I can't remember what that street is. It's off of 47th and 48th. But I mean, that's got the sewer and water. It's just an easy extension. I mean, you're already in the process of doing that. So I beg to differ. You can easily add another block of street if you have somebody that's interested in the next lot over. Where you can't is probably this one.
Mr. Mayor?
Mrs. Rose Jones.
Thank you, Mr. Mayor. Mr. Friedrich, perhaps there is work that's being done there. That was something I was not aware of, and so I apologize for making a statement that was not entirely true. So we're talking about those two closest lots. I still think that the statement that I made holds true for the balance of the lots that are to the west of that. I don't think that it's cost effective to say that it's easy to put in the infrastructure for all of those lots just because it's possible to do it one at a time.
We did just approve a plat there,
Okay.
a subdivision, so. So I guess, commissioners, I'm looking for recommendations, motions on this property. We can, we've already adjusted the Westridge market. If there are no more arguments or statements on the apartments, I guess we can start with the apartments. Westridge apartment, which is 2500-0100-0200. It is named Westridge Apartments. The current true and full value is $14,516,300. The value in 2017 was $20,093,300. The requested abatement is for $14,363,311.
Mr. President,
Mr. Frederick,
I'd make a motion to deny the abatement request on 2500-0100-0200.
we have a motion to deny
Second.
with a second. Any further discussion or questions? Hearing none, we'll vote. Mr. Frederick?
Aye.
Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye. The next property we'll take under consideration is parcel ID 2507-0100-2600, and that is named Prairie Winds Apartment 1 LLC. The value in 2017 placed on it by the city was $3,581,800. The abated value asked for by the owners is $2,285,922. What is the commission's pleasure?
Mr. President,
Mrs. Trustum,
I move to deny the request for a change in value.
we have a motion to deny the request and change of value
Second.
with a second. Any further discussion or questions? Hearing none, we'll vote. Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Mr. Frederick?
Aye.
Chair votes aye. Next property we'll take under consideration is parcel ID 2507-0100-2700 Prairie Winds Apartment 2 LLC. Current, the 2017 true value, was $3,583,100. The abated value asked for by the current owners is $2,452,630.
Mr. President, I make a motion to deny the abatement request.
We have a motion to deny
Second.
with a second. Any further discussion or questions? Hearing none, we'll vote. Mr. Frederick?
Aye.
Ms. Walla?
Aye.
Mrs. Trustum?
Aye.
Chair votes aye. Now we'll deal with the vacant parcels. We have one recommended already by Mr. Hirschfeld, parcel ID 2610-1500-0200, and that value in 2017 was $1,338,800. His recommendation is that and the requested abated value is $8,000, and that is his recommendation.
Mr. President, I move to approve the recommendation from the city assessor.
We have a motion to approve the recommended value of $8,000.
Second. No.
With a second. Any further discussion or questions for staff? Hearing none, we'll vote. Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Mr. Frederick?
Aye.
Chair votes aye. We'll move on to the first parcel, 2610-1500-0100, which is valued currently, or I take that back, 2017 true value was $1,593,200. The owners have requested that it would be changed to $11,000.
Mr. President,
Yes.
as we go through these vacant lots, would you like us to pull up our pictometry, our aerials, and our parcel maps? That way
You can see them.
you're okay with what we have
You
here?
can see them.
Okay.
Commissioners? I think this is the large lot all the way to the west, if I'm correct.
No, the first one, no, you won't. Let's see
I
here.
think you read off vacant lot number 3, but then gave the, I don't know.
Well, I read off, the first one I read off was 2610-1500-02.
Oh, it is the vacant lot, yeah.
It's the big,
Okay.
yeah. This one is 2610-1500-0100. It's the large parcel all the way to the west on the bottom of your map.
Okay.
And the current, the 2019 value is 11,200, and I think that was placed upon it by the state put 11,000 on theirs. If I'm correct, right?
That is correct.
President, that is correct, and if I may, because some of these have an odd number, we deal with rounding to the nearest 100. If you want to suggest that we just put ag land value on that, that will be sufficient. We will correct that to ag land value. Because like the 950 might be 900, the 1450 might actually be 1500 after it's rounded. So if you want to do it to ag land value, that would be sufficient. It would differ very slightly from this, possibly.
And that's 14.97 acres.
Mr. President, I'd make that motion to reduce it to ag land value for 2017.
We have a motion to reduce it to ag land value for 2017.
Second.
Do we have an idea?
750 an acre.
Yeah, times the 14.97, so they have at least have a price, so. I guess you would have a ballpark figure.
Mr. Mayor, if you make the motion to reduce it to ag land value, that's what we're asking for.
Okay.
Thank you.
Okay, and that is the motion right now, and that is by Commissioner Frederick, seconded by, was it Commissioner Trustum?
Correct.
Mr. Mayor, may I ask a clarifying question?
Yes.
If the commission is amenable to it, may we also make the motion at this time to do it for 17 and 18?
I guess we might as well go through that.
I don't have an issue.
Yeah.
We're
Yeah, we
reducing
can do it for
17.
17.
Thank you.
I'd amend my motion.
Okay. So we have an
Include
amended
18.
motion to include 17 and 18.
Second.
Okay. Any other questions or comments? Hearing none, we'll vote. Mr. Frederick?
Aye.
Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye. The next parcel that we will look at is 2610-0500-0100, and that is the land adjacent to the Menards, as stated here. It had a value of, in 2017, of $2,045,800. The abatement request is $20,500, and the state placed a value of $20,483 on it.
Mr. President, this is the one I'm struggling with. I mean, so if 60% of the property was considered not disturbed, I mean, you could graze or what, I mean, this is where I have my biggest hang up with this one. I mean, we obviously see disturbance to the south.
There's a pit there. I drove by it the other day and they were taking dirt out of it.
And it's the black, I mean, a lot of it's the black dirt that they brought in when they developed the rest of it, because, I mean, I don't know, that's where I struggle. So do we deny it based on 25 or 30% of the lot being disturbed, or do we come to some kind of middle ground?
That's, I guess, up to, you know, you as commissioners. I'm open to, I think the land is disturbed there, but it's not that you couldn't produce something there. That's, I guess there's your definition. You know?
Mr. President, Commissioners, that's, again, how it's indicated in the statute, that it is disturbed to the extent that the property cannot be used to raise crops or graze farm animals. That's verbatim from the statute.
And then this goes to my other argument is there could be somebody that would want to come in and buy that, a large box store, and it's contiguous to another large box store. It's not separated by a big giant empty parcel. So that's the same argument I make with the top stuff. You know, if you had the right tenant, could somebody come in and buy that lot? I believe they could, and make it a fairly easy.
Mr. Mayor, may I ask a question?
Sure, go ahead, Mrs. Rose Jones.
Thank you, Mr. Mayor. I guess the question is, if someone did come in and buy that lot and a building permit were pulled for that property, is it not going to be reassessed at that time?
Once it's complete, I would imagine, right, Mr. Hirschfield?
Mr. Chairman, Commissioner Frederick, that's correct. Upon completion, at that point, or at least the start of construction where there's a foundation or something down, then the obsolescence would come off. If I may provide another explanation that may be suitable to both parties. And initially, when I look at this and we consider, you know, only part of it's disturbed, you can still farm part of the rest of it. Statute doesn't make that provision, but maybe we can add obsolescence, additional obsolescence for the percentage of the property that's not being used, because you're not going to build on that hole either right now. It would have to be graded. So it certainly should consider adding additional obsolescence maybe for that fact. We could go that route. I don't have a number to bring before you.
Mr. Mayor, may I ask another clarifying question? And this would be a question for Ms. Wenko. Is there anything that would prohibit Roars from putting that property, removing the dirt pile and putting that back into a state where the entire lot could be used for agricultural purposes or would be appropriate for agricultural purposes?
To answer your question, Ms. Roars-Jones, I don't believe that there's anything prohibiting you from exercising your property in a manner that you choose to do. I guess the question will fall back on the commission as to whether that change or a reversion back to what it once was will affect your decision on whether it's continued to be disturbed or not. That will be a factual determination that you all will have to make.
But Mrs. Rose Jones, you've already got your wish on that in 2019 with the state. So we're talking about the prior 2 years. So if you go and put the dirt back or fill the hole in, I mean, you're doing that after the fact.
That's a fair point, thank you.
So I would make a motion that we apply obsolescence to the portion of the land that is disturbed and deny the rest of the abatement
The abated.
value. If that's any less clear, then just let me know.
In order to move forward with this tonight, there won't be a dollar value, but if determination of the amount, if we do full 100% obsolescence of the south part, and I'm talking maybe in line with the north line of that little lot, we went straight across and pulled the value off from that, would that?
May I clarify the motion? Mr. Mayor and Commissioner Frederick, if the motion is to deny the rest, to me it seems like if you pull that portion out, then that would be the portion that would be taxed at a commercial rate, and perhaps you apply some sort of obsolescence to that portion, but the remainder of the parcel should be taxed at agricultural values.
I would support that with a lot split.
Well, that's not happening tonight.
Yeah.
I just go back to my same argument. I still think that's contiguous to other commercial. It's right on the edge of your development. You can add to that road fairly easily. I know it's expensive. I get all that point. You can have a tenant take that lot. So I struggle with that. I struggle saying that's ag. If this parcel was over here and we were making that argument, then it would be different. But I stick to my motion. I don't have any problem using the north line of that small lot as the area to use for the obsolescence.
Mr. Mayor?
Mrs. Roars-Jones.
Thank you, Mr. Mayor. Could I ask Ms. Wenko to read the portion of the definition related to contiguousness?
Yes, second to locate it.
It's contiguous to ag, which it's not now. It's not, because on two sides it's got commercial.
Well, you have residential on the north side, commercial on the east,
Or, yeah, sorry.
so.
Well, actually, I think most of this is commercial still.
Is it?
Yeah.
Okay. So most of that new addition going in is gonna be the farthest north lots.
Right. East and north, yeah.
Well, he's just put up those buildings there, right next to TSC.
Yeah, that's right here.
Yeah.
And then they're taking this piece right here.
Right, and they're making that the,
That residential area, yeah.
Mr. President, Commissioners, to answer Ms. Roars-Jones' question, according to the statute, there is no defined definition for what is contiguous. There are several other definitions, but that is not one that's identified in Chapter 570201. So unfortunately, there's nothing in there.
Ms. Wenko, what I guess I was looking for was, I believe that requires development on 3 sides. Maybe I'm referencing the wrong section.
Oh,
And there's
yes.
Is that-
there's an interstate highway on the
yeah,
other
does
side.
the highway count as development?
It's a very good question, Mr. Mayor. I don't know if it does.
That
not
might
gonna
be,
build
you're
it.
gonna have to leave that one up to the courts.
Yeah.
So,
It says property has assumed an urban atmosphere because of adjacent residential or commercial development on 3 or more sides. Parcel is less than 10 acres and not contiguous to agricultural property.
to me, the interstate would be development. I mean,
Well,
that's splitting hairs again, and
again,
that's
it-
maybe for the courts
the
to
one
decide.
thing that Mrs. Wenko just read is less than 10 acres.
That's one of the requirements, that's
Okay.
subsection 6, that the
Okay.
parcel is less than
'Cause this is
10 acres.
27.31. So,
I would again go back to my original
okay,
motion.
so your motion is to decrease the value with the obsolescence using the north border of 26,005,00200 as the section that will be the reduction in the property value for obsolescence
Correct, and I would be open to doing that for 17 and 18.
for 17 and 18. Okay.
Second.
With a second, any further questions or comments? Hearing none, we'll vote. Mr. Frederick?
Aye.
Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye. Motion carries.
And then the other unimproved, I'll get this one out of the way right away, it would be parcel 26101-400-1800. I'd make a motion that we abate that to the, for 2017 and 18 to the
To
ag value.
a motion to take 2610-0400-00800 from its commercial valuation in 2017 of $169,200 to ag value in 2017 and 18.
Second.
Any questions, comments? Hearing none, we'll vote. Mr. Frederick?
Aye.
Ms. Walla?
Aye.
Mrs. Trustum? Aye. Chair votes aye. Motion carries. We'll move back up to the top, 2610-0400-0100. That property is located in the, directly north, in the middle almost of your map. This is the part what Mr. Frederick was saying is being, some of this is being developed as we speak. So,
I'd make a motion to deny the abatement for that parcel.
we have a motion to deny
Second.
with a second. Any further discussion? Hearing none, we'll vote. Mr. Frederick?
Aye.
Ms. Walla?
Aye.
Mrs. Trustum?
Aye.
Chair votes aye.
May I just ask which parcel number that was? I did not catch that.
It was 2610-0400-0100.
Thank you, Mr. Mayor.
And then we'll move on to 2610-0400-0200.
Mr. President, I make a motion to deny the abatement request.
We have a motion to deny
Second.
with a second. Any further discussion, questions? Hearing none, we'll vote. Mr. Frederick?
Aye.
Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye. Motion carries. We'll move on to 2610-0400-0300.
Mr. President, I'll make a motion to deny the request for change in value.
We have a motion to deny the request for change of value
Second.
with a second. Any further discussion or questions? Hearing none, we'll vote. Ms. Walla?
Aye.
Mrs. Trustum?
Aye.
Mr. Frederick?
Aye.
Chair votes aye. Motion carries. Next item up here is 2610-0400-0400.
Mr. President, I make a motion to deny the abatement request.
We have a motion to deny
Second.
with a second. Any further discussion or questions? Hearing none, we'll vote. Mr. Frederick?
Aye.
Ms. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye. Motion carries. Next item up is 2610-0400-0500. The request is, the true value is $147,100 to ag at $900,000.
Mr. President, move to deny the request.
We have a motion to deny
Second.
with a second. Any discussion or questions? Hearing none, we'll vote. Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Mr. Frederick?
Aye.
Chair votes aye. Motion carries. Next item up is 2610-0400-0600. Value in 2017 was 160,100. The current owners are asking for abatement to ag.
Mr. President, I move to deny the abatement request.
We have a motion to deny
Second.
abatement request with a second. Any further discussion or questions?
Mr. Mayor, may I ask a question
Yes.
at this point? Thank you. Mr. Mayor, I guess I do have a question on this lot and the lot prior, which are actually much smaller than the lots 300 and 400 that were the two before that. And I'm curious as to why the assessed value is nearly $100,000 more for each of those two lots than the lots above.
I'm guessing it's the difference between R3 and commercial.
I think the north ones are residential and the bottom ones are commercial.
Thank you, Mr. Mayor.
Am I correct?
Mr. President?
Or Mr. Frederick, Commissioner Frederick?
It is a zoning difference.
So again, we're on 2610-0400-0700, right? Okay. And that is, again, current value of 169,200. They're asking for ag value of 1,000.
Mr. President, I move to deny the abatement request.
We have a motion to deny
Second.
with a second.
Mr.
Further
Mayor,
discussion?
oh, I apologize. I thought you were done with that one. You did not act on the 0600 one.
I did. Did I?
Oh, we forgot to vote.
Oh, forgot to vote? Okay. Let me go up one here.
For the vote on the 600.
This way.
Okay.
Are we allowed to do these at one time if the motion is similar?
I think it would probably be, it's time consuming, but considering there are different assessed values for each of the properties, it's probably
Okay.
best to do them independently.
So we'll go back to 600. We have a motion by Commissioner Frederick with a second by Commissioner Trustum. Okay. Mr. Frederick?
Aye.
Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye. Motion carries to deny. Now we'll go to 700, and we have a motion on the table by Mr. Frederick with a second by Ms. Walla to deny. Any further discussion? We'll go ahead and vote. Mr. Frederick?
Aye.
Ms. Walla?
Aye.
Mrs. Trustum?
Aye.
Chair votes aye. Motion carries. We'll jump down to 2610-0400-0900. This is,
You skipped 800 now.
yeah, but you did 800 already.
Oh, 1800, that was the last one I did.
Oh, you did 1800?
Yeah.
I thought you did 800.
No, it's the 1800.
Oh, 1800, okay. I marked it wrong here. Okay, so 800. We'll go back. Okay, we'll look for a motion on 2610-0400-0800.
Move to deny the abatement request.
We have a motion to deny
Second.
with a second. Any further discussion or questions? We'll go ahead and vote. Mr. Frederick?
Aye.
Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Chair votes aye. Motion carries. Now we'll go to 2610-0400-0900.
Mr. President, I move to deny the abatement
I have
request.
a motion to deny
Second.
with a second. Any further discussion or questions? Hearing none, we'll vote. Mrs. Trustum?
Aye.
Ms. Walla?
Aye.
Mr. Frederick?
Aye.
Chair votes aye. Motion carries. On to 2610-0400-1000. We have a value of $170,500 in 2017. Request to move this to ag.
Mr. President, I would move to deny their request.
We have a motion to deny.
Second.
The second. Any further discussion? Hearing none, we'll vote. Mrs. Trustum?
Aye.
Mr. Frederick?
Aye.
Ms. Walla?
Aye.
Chair votes aye. Motion carries. Next parcel is 2610-0500-0200. We have 17 value of $130,200. Request of ag, $800.
Mr. President, I make a motion to deny the abatement request.
We have a motion to deny the abatement request.
Second.
With a second. Any further discussion? Hearing none, we'll vote. Mr. Frederick?
Aye.
Ms. Walla?
Aye.
Mrs. Trustum?
Aye.
Chair votes aye. Motion carries. Next parcel is 2610-0600-0100. True and present value of $284,900. The request to switch to ag of $1,700.
Mr. President, I move to deny the request for the change in value.
We have a motion to deny the request for change of value.
Second.
Any further discussion or questions? We'll go ahead and vote. Ms. Walla?
Aye.
Mrs. Trustum?
Aye.
Mr. Frederick?
Aye.
Chair votes aye. Motion carries. I think that covers all your properties, Mrs. Rohr.
Thank you, Mr. Mayor, members of the commission. I appreciate your time this evening. I know that it was a lot of details and nitpicking, but I do appreciate your time.
Thank you.
Thank you.
Thank you.
Thank you.
I think, I know it's not, it's on this list here, but it's not on the, was this pulled, the Ryan Incorporated?
That one was heard. That was the Red Roof Inn.
Mr. Mayor, may I make a request? May I get copies of Mr. Mr. Hirschfield's slides from this evening? And is it possible to get an audio of this evening's hearing?
It's all public, so.
Okay. Is there someplace that I can go to get it?
It's available on YouTube.
On YouTube?
Yep.
Thank you.
It's on our city website.
Thank you. Mr. Mayor, I would like to use that to prepare for the hearing at the county on Monday. Is there a possibility of getting it before then?
I guess that's,
Our-
I guess a public, and I'll defer to our city attorney. This is basically an open records request, right?
Correct.
So we have what amount of time to?
A reasonable amount of time to accommodate your request.
So I guess,
Mr. Mayor, could I at least get the slides emailed to me?
yeah, I think Mr. Hirschfeld can, yeah.
Thank you.
Absolutely.
I certainly will.
That, not an issue. I can get those to you.
Perfect. Thank you.
Okay, Mr. Hirschfeld, is there anything else?
Mr. President, the only other thing I had was typically we send over our reasons for the changes that we've made. As a guide, I've included a prior letter we've sent to the county, and if the language is all right,
You just change it to tonight's,
to tonight's and change parcel numbers, and I mean, if this language is adequate.
I think
Looks
that would
great.
be adequate. I guess I just have a question back to the Red Roof Inn. When did we do
I don't
that?
think we heard that.
We heard that one in November.
Oh,
Okay.
okay.
That one, the evening we put up
Oh,
with
that was
meeting
the
of-
solo one.
Solo.
Okay.
Oh, okay, never mind. All right. I was like,
I
we
just
didn't hear
saw it-
it-
I just saw it on
We
the
didn't hear
list.
it, yeah, we didn't
I
hear it
don't
tonight.
have a special meeting tomorrow all of a sudden. So you'll prepare that document and I'll get it signed in the morning?
Do we need a motion for that, or?
I guess,
Do we need a motion?
if this is an appropriate document, commissioners, what we submitted to the county last year, it's on the back of your packet. We'll prepare the exact same statement for them.
Good.
Okay,
I don't have any issue with
okay,
that, so.
that's fine.
Mr. President, because you're signing it, I would recommend that just for procedural
Okay.
sake, you make a motion and then
All right,
approve that.
so get a motion
I'd make
to
a,
approve the format of the documentation being forwarded to the county.
so move.
Second.
We have a motion to approve the documentation being forwarded to the county with a second. Any further discussion, questions on this document? Hearing none, all in favor of this Documentation being forwarded to the county in this current format, state aye.
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 Opposed, same sign. Motion carries. And that is it for our agenda, so I'd look for a motion to adjourn.
So moved.
Second.
We are adjourned.